with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everyone. Live from the Bloomberg Interactive Brokers studio. We are streaming also on YouTube. It is Wednesday. It's actually a Fed Beige Book Wednesday on this Fed April 20th, 2022, Fed Wednesday. Beige Book crossing. Charlie mentioning some of the headlines. This is a survey of economic conditions, and one of the big headlines, growth outlook clouded by geopolitics and inflation.
Yeah, the Fed also saying that employment increased at a moderate pace. Inflationary pressures remain strong. We're going to have much more on this. We care about this because it's used by the FOMC at their meetings. More in a moment. But the big story, Carol, it's in stocks.
Oh my God, Netflix basically getting almost almost a 50%, but 40% haircut. So market cap really sliced almost in half. We're going to talk about that. And also the broader drop in media stocks as investors run screaming from streaming.
The investors are also running away from cannabis stocks. One cannabis ETF investor is going to join us today, 420, and he's going to make his case.
Yeah, he is indeed. Plus a great story about Pixar's WALL-E and how it predicted our future. And speaking of 420 means Tesla earnings.
Yeah, well, Elon Musk loves the number. What you need to watch out for, it's not just about Elon's bid for Twitter, or is it? Is he going to be on the call?
Yeah, I don't know. He's tweeted, I think, that he is. We're also going to talk about ESG, a help or a hindrance. We've got a great roundtable to talk about that. But we do want to get more into the Beige Book.
Bloomberg Business Week is brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more.
All right, let's get to the Market Drivers Report. Let's set that Business Week agenda, and it's led by those Beige Book and the headlines off of that. Kriti Gupta with us, markets correspondent at Bloomberg in our Interactive Brokers studio. So too is Eliza Winger. She is U.S. economist at Bloomberg News. And Eliza, I do want to start with you because the Beige Book, it is important, as Tim mentioned. This is a public accounting that we get to see, but the FOMC also sees, and it will be looking at it for its next meeting.
Correct. And
what jumps out for you in the headlines?
Oh, thank you. And so the Beige Book noted that economic activity expanded at a moderate pace. Last Beige Book noted that it was modest to moderate pace. And what's important to highlight is that consumer spending accelerated among retail and services sectors, meaning we did see some slowdown in retail sales in March as we see a rotation away from goods to services. So this is not only good news for the rotation as a whole, and which will propel economic activity this year, but this seems to recognize that there's also a pretty good spending, solid spending for retailers.
So consumers are out there in full force, and we all thought it was going to go away from retail right into the service sector, right? That's what we were anticipating. Right. We're now seeing kind of both, at least according to the Beige Book.
Well, according to the Beige Book, yeah, we are seeing both. So there's definitely a good news coming from Beige Book. I mean, the Beige Book did say that future growth was clouded by uncertainty created by recent geopolitical events and rising prices. But other than that, all the details on manufacturing activity expanding on a solid pace, at a solid pace, consumer spending, and even real estate. Housing market has been slowing because mortgage rates spiked, but according to this Beige Book, real estate activity accelerated modestly, which is all good news. Good news on employment also. Employment increased at a moderate pace. And there's persistent labor demand.
So net, it's pretty strong.
Net, I would say pretty strong.
It reminds me of the comments that Brian Moynihan, the CEO of Bank of America, made to David Weston just a little earlier. He said that spending is up on travel, entertainment, and food, also saying that consumers are holding up well as rates rise. Kriti Gupta is also with us. Kriti, you are watching the markets closely. Are we seeing any market reaction to Beige Book headlines right now?
Not a ton to the Beige Book, and this isn't going to be that surprising. The markets don't tend to trade off the Beige Book. They will trade, of course, off the meetings, especially when I think you have a 50 basis point.
And minutes, too.
Right, but on the 50 basis point rate hike already priced into the market. So it kind of seems like investors have already decided the direction that the May 4th meeting is going to go to. I think the thing that's really catching my eye, though, is this divergence you're seeing in the S&P 500, the Dow, and the NASDAQ, because it wasn't too long ago that when you see a big tech name like Netflix, for example, essentially plunge the way it's plunging, it would take the entire market down with it. You aren't seeing that today. You're seeing tech come down with it, right? The growth stocks, the kind of end of the pandemic boom. And yet, a lot of these other sectors are actually posting some pretty good breadth. In fact, the only two sectors that are down are consumer discretionary and communication services. And once again, that's where a lot of your big tech names rest.
Yeah, I think it's 50% of consumer discretionary is Amazon and Tesla.
Exactly.
So.
Well, and it's interesting because maybe then they're looking at it as a Netflix problem. Aliza, so in terms of what we expect from the Fed, does this kind of confirm maybe 50 basis points at that May meeting?
Definitely.
Definitely.
Yes, most definitely. This is what we are expecting, a 50 basis point increase at the May meeting. So I think this provides, first of all, it says that inflationary pressures remain strong. Second of all, there is a economic foundation to go ahead. So I think based on those two forces that we are seeing in the Beige Book alone, I think that definitely kind of stamps the 50 basis point increase at
Any
the May
red
meeting.
flags, Aliza, that you see in the Beige Book right now? Any words of caution, notes of caution, things that make your ears perk up a little bit?
You can say no.
Yeah.
I mean, there is
and we should say
one-
you're looking at it in real time right now.
No.
So I'm putting you on
Why?
the spot.
No. Thank you for that. There is one comment that few districts noted negative sales impacts from rising prices.
Oh.
So definitely there is some negative impact, and we noticed that in the March retail sales that
Right.
there is a slowing demand in goods, although
Although
they
Procter
noticed.
Gamble had a sales beat today, and they were able to raise prices in part, right?
Over 10%.
That's big. That's big. And that's like those general things that you need in your household, and many of them considered pretty necessary. Guys, thank you so much. We got to run. Kriti Gupta, markets correspondent at Bloomberg. She's going to be back a little bit later on with her chart of the day. And Aliza Winger, U.S. economist at Bloomberg News, breaking down those breaking down the Beige Book. But again, it does feel like we're hearing it from Brian Moynihan of Bank of America. A lot of, I feel like, leaders are saying it looks okay.
Like the consumer can handle it.
And it's geopolitics. Like, these are the things
That's
we
the
understand
unknown,
higher prices, right? Right, that we worry about things.
Let's get to Washington, D.C. now for a check of the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. 8 weeks after Russia invaded Ukraine, a small but growing number of senior Kremlin insiders are quietly questioning, Vladimir Putin's decision to go to war.
Some in the elite fear the invasion was a catastrophic mistake, but that Putin is in no danger of losing power. Sources tell Bloomberg News that Putin has become more reliant on hardline advisors and has dismissed any warnings of the economic cost. While they believe that conflict with the West is inevitable, more have come to believe that the war will doom Russia to years of isolation that will leave its economy crippled, its security compromised, and its global influence gutted. In Washington, I'm Amy Morris, Bloomberg Radio.
President Biden will be meeting with U.S. defense officials during a dinner this evening at the White House. WikiLeaks founder Julian Assange is a step closer to being extradited to the U.S. to face nearly 20 charges of violating the Espionage Act. A London court today issued a formal extradition order and sent it to Britain's Home Secretary for approval. It would allow Assange to return to the U.S. to face trial. A motive is unclear, but law enforcement officials in Washington, D.C. say a person trying to break into the Peruvian ambassador's residence this morning was shot and killed by Secret Service police. D.C. Police Chief Robert Conti.
We don't know if he actually got in. It's a very large property, and there were windows smashed, entry door windows that were smashed all around the property. So it's kind of hard to tell.
Chief Conti says the ambassador, his family, and all residential staff are safe. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in her 99.1 newsroom in the nation's capital. Just want to mention a headline crossing
So many
Shopify.
good stories.
I know.
Sorry for interrupting
Slow
you.
down, everybody.
I'm sorry for interrupting you, Carol.
It's okay, you can interrupt me. Shopify, say that again. Shopify is in talks to buy tech startup Deliver, according to people familiar with the matter. It's a move that could help the Canadian e-commerce company expand in fulfillment services, and a deal could value the San Francisco-based Deliver at more than $2 billion, according to those in the know.
Yeah, they asked not to be identified because the matter isn't public, so shout out to our team for breaking this story. No final decision has been made, and discussions could fall apart, the people said. A representative for Shopify declined to comment, while representatives for Deliver did not immediately respond to requests for comment. So Deliver Deliver helps merchants on Amazon and eBay and other online marketplaces get products to consumers in 2 days or less. That's according to its website. Fast shipping, Carol, it's become a must-have service for retailers as the booming online shopping market became increasingly competitive during the pandemic.
Shopify not having a great day. It's down 11%.
Not having a great year.
Yeah, there's that too.
Yeah, Shopify, this would be Shopify's largest ever deal. That's according to data compiled by Bloomberg. It would complement the company's subscription-based software that allows anyone to set up an online store.
And they're one of those that are doing the stock split, right? They're doing that 10-for-1 split of Class A and Class B shares. We got that announcement on April 11th. So kind of interesting to see this.
Down 60% year to date, 61%.
Yeah, okay. So what's interesting is we continue to see companies make decisions and do deals, and you would not normally see this. I remember talking to this Lynn Martin over at the New York Stock Exchange Group, who said, you're not going to see IPOs or deals happening if there's uncertainty about the outlook. So I always, whether or not this is a good deal or whether investors will like it or whether it will go through, to me it's a sign that there's confidence among companies to do something.
Yeah,
rather than hold back.
Yeah, exactly. Well, they have to. In a lot of cases, a lot of these companies have to make acquisitions or at least figure out what the next opportunity is going to be. They don't want to end up somewhere where they're not growing.
Right, but they're not going to do it in a volatile market environment, right, or an uncertain one. So I always think when I see a deal flow or even an announcement that it's a positive sign. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. The Federal Reserve says the U.S. economy grew at a moderate pace through mid-April and inflationary pressures remain strong, but rising prices and geopolitical developments created a cloudy outlook for future growth. Repeating a story we brought you moments ago, Shopify said to be in talks to buy technology startup Deliver. They're based in San Francisco. It's a move that would help the Canadian e-commerce company expand in fulfillment services. Shopify shares, they are dropping on that word, down now by 11%. Italy has announced an energy deal with Angola to boost gas imports. Stocks trading mixed. We've got the S&P up 10 now, up by about 0.2%. The Dow up 340, up 1%. NASDAQ down 119, lower by 0.9%. 10 years up 22.30 seconds. 10-year yield 2.85%. Gold little changed, up 0.1%, 19.52 the ounce. And West Texas Intermediate crude also little changed, up 0.1%, 102.65 a barrel. Earnings front and center. Netflix plunging after last night's report, down 36.3%. Tesla reports today after the close of trading, down now by 4.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massler along with Tim Stenovic. We are live here on Bloomberg Business Week. So I got to say, not fun watching shares of Netflix drop like a rock, especially if you were or are an investor. Stock down nearly 40% at its lows today, cratering as investors punish the company for its shock loss in subscribers and an abrupt turnabout to embrace advertising after years of not. So we got to get this story.
Yeah, few people know as much about Netflix as our own Lucas Shaw does. He's entertainment reporter for Bloomberg News. He joins us now on the phone from L.A. Lucas, for years we heard from Reed Hastings and company that it didn't matter if people shared their passwords and that they were never going to bring advertising into Netflix. What prompted this about-face?
It's a great question, and one to which I don't think anyone has the clear answer. I've asked people up and down the company today because as recently as a month ago, they were saying that the strategy was just to stay the course. But it's clear that they have been spooked both by the subscriber losses in the most recent quarter, in the first quarter, and what they're seeing happening in the current one, the second. This has been a growth stock for the last 15, 20 years, and they're not growing anymore. And so they need to try a bunch of different things. And what they announced yesterday felt a little bit to me like the kitchen sink approach, where they were just sort of throwing everything at people. All the things they said they wouldn't do, they now say they will. The only thing that they're sort of holding the line on is sports.
It did feel like a little tinge of desperation, kind of jumping the shark a little bit. Is it just that there's so much more competition? Is it that we're coming out of the pandemic and we're all tired of sitting on the couch watching stuff? Is it a couple of things at play, or what is it?
Yeah, it's hard to pick one reason. The company identified four. They talked about smart TV penetration. They talked about competition. They talked about password sharing. You identified one that they spoke about less, but I think is also an issue, which is, people are going out into the world and, they're just not as interested in staying home and watching TV. It's always hard to diagnose one reason for something like this. I do think that competition and reopening are probably the two biggest factors, because password sharing has been an issue for Netflix for a long time. They're now saying they're going to do more to combat it, but it's not a new problem. The new problem is that people have a lot of other things that they want to do with their time, including other services where they can get pretty much the same quality shows, and often now actually at a cheaper price.
Right. Hey, I do wonder, Lucas, I think all of us were kind of shocked with that headline crossed about Netflix losing subscribers yesterday, to the point where we're like, wait a minute, is this a mistake, right? Because it was just not what we were anticipating. Here we are, kind of the morning after. How are you thinking about the Netflix story going forward? What are you hearing are kind of the smart conversations to be having? Because I'm thinking about a lot of investors out there are pretty spooked right now.
They have a right to be spooked. This is the most vulnerable the company has felt in a long time. It's not really clear exactly where they go from here. I think some of the comments from Reed Hastings and others caught people even inside the company off guard. I remember having a meeting with someone at Netflix a few months ago, in which I detected a shift in how they were talking about advertising, and it felt to me like this was coming. And when I asked other people at the company, they told me not to make too much of it. And so clearly things have changed over the last couple of months. If you take what Reed Hastings said yesterday, it feels like they're in they're just trying stuff right now. I don't think they have any idea exactly what advertising on their service is going to look like. I don't think they have a ton of confidence or certainty that trying to curb password sharing is going to work. And one of the things that did strike me yesterday was that they didn't talk a lot about content or shows in diagnosing their problems. They've always attributed, the quality of their shows and popular titles with attracting new subscribers. And you'd think that maybe that's one of the reasons why they've now run into a problem, is that their shows aren't being as effective at bringing people in.
Lucas, I see a drop like this, and I think back to more than 10 years ago, the Quickster debacle, when Reed Hastings had to come out and essentially apologize for confusing consumers about splitting the businesses in two, one the DVD business, the other, of course, the streaming business that it's now known for. Is this another Quickster moment for the company where it doesn't really understand its identity moving forward?
Well, so it's interesting that you bring that up, because Quickster was the last time that they had a subscriber loss, but Quickster was more of an optics error or a minor tactical error. The big picture strategy was dead on. What Reed Hastings was trying to do with the company in splitting DVD by mail from streaming was getting ahead of what he saw as the next evolution in entertainment. And Netflix has been ahead of the curve, first with that and then with producing original programming. They sort of saw the threat to their business and they got ahead of it. What's interesting this time to me is it feels more reactive. Netflix is now the incumbent and they're not really sure what their next move should be. So I actually think it's a totally different situation, similar in that there's now an existential threat, but they don't necessarily have the answer.
Just got, first of all, Netflix DVDs. In the mail. It just sounds so quaint. Hey, just got about 20, 30 seconds here, Lucas. Should we not be counting Netflix out, nor Reed Hastings?
No. Look, this is a company with 220 million customers run by one of the most successful entrepreneurs of the last 20 years. It's not like it's going to die tomorrow, but they do face a greater challenge than they have in a very long time.
All right, we're going to run. Hey, great reporting and great conversation. Of course, our Bloomberg News entertainment reporter, Lucas Shaw. Netflix shares tanking today. They're now down 63% so far here in 2022. Stock's down 36% right now.
Lucas's story, the most read on the Bloomberg terminal in the last 8 hours. Already tweeted it out if you haven't read it yet on Bloomberg.com.
We're still reeling from that.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening and watching on YouTube, Bloomberg Business Week. Carol Masser along with Tim Stenovec live at Bloomberg headquarters in New York City. We're going to talk a little bit more about that Netflix effect because it's dragging down that share price, a 40% haircut in that share price as subscribers drop for the first time ever?
First time in 10 years.
10 years in a decade. With that whole sector being impacted.
Yeah, looking forward to broadening the conversation. We're going to do that with Geeta Raghunathan of Bloomberg Intelligence. She's technology and media analyst. First, though, let's get a check of the trading day. Less than 90 minutes to go, Charlie Pellet.
Indeed, Tim. Looking at a mixed market right now with the Dow higher, S&P higher, NASDAQ on the minus side. Do want to bring you a headline from the San Francisco Federal Reserve. The Federal Reserve's president out there, Mary Daly, says there is, quote, a really solid case for a 50 basis point rate hike in May. 10-year yield right now, 2.84%. S&P holding on to a 5-point gain, up by about 0.1%. We've got the Dow up 276 now, up 0.8%. NASDAQ on the minus side, down 132. Has been lower all day long. NASDAQ down now by 1%. Netflix certainly weighing on NASDAQ. We'll have more on the Netflix story for you coming up in a moment. But again, Netflix shares plunging now by 36.6%. The 10-year yield, 2.84%. Spot gold up 0.1%, $19.52 the ounce. West Texas Intermediate crude up 0.2%, $102.75 a barrel. Again, the Dow up 0.8%, S&P up 0.1%. Abbott Labs this morning posted stronger than expected first quarter profit and revenue, fueled by high demand for its COVID-19 testing products during the winter Omicron surge. Abbott shares now are up by 1.8%. A poll from the Associated Press NORC Center for Public Affairs finds a majority of Americans continue to support a mask requirement for people traveling on airplanes and other shared transportation. Dr. Bhakti Hansati is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
So the science is very clear. We know that masks prevent transmission of COVID. We know COVID cases are going up. We do also know that COVID deaths are not going up. So is it really, the question is, do we still need masks? Is this still a necessary precaution? And it's all about science, but about weighing the risks and the benefits.
Dr. Bhakti Hansati of the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Checking some of the vaccine stocks that we check on a regular basis. Pfizer down 1.3%. Its German partner BioNTech, its ADR is down 3.2%. AstraZeneca up 0.9%. Moderna down 1.6%. Johnson & Johnson up by 0.1%. Tesla reports after the close of trading today. Tesla down by 4%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we are focusing, like Charlie, like all of us, on what's going on with Netflix, still down about 36%, but it's also dragging down some other members of the media group. Roku is down more than 5%. Paramount is down 7.4%. Disney is down about 5%. So we want to bring in a member of our Bloomberg Intelligence team who watches this space and just has some great insight.
We're talking about Geeta Raghunathan, technology and media analyst for Bloomberg Intelligence. She joins us on the phone from our Princeton, New Jersey bureau. Geeta, I know it's been a very busy day for you, so we certainly appreciate you taking the time. We spoke to Lucas specifically about Netflix in the last few minutes. We want to broaden the conversation with you and talk more about the ecosystem right now, because for years, linear companies have been in the midst of this transformation that Netflix really invented, and they seem to be doing a pretty good job. Are there new questions now, though, about the sustainability of streaming as a business after Netflix's shocking quarter?
Absolutely, and thank you so much, Tim and Carol, for having me. I think this was really a reality check, right? This was a wake-up call for media and for the whole streaming model as a whole. So I think there are a couple of things here that we kind of really have to look at. I don't think, if you kind of look at some of the other streaming entrants, like you look at a Disney Plus or even a Discovery Plus, HBO Max, those companies are all still pretty nascent in terms of their streaming growth. And so I don't necessarily think they'll face these headwinds right away. But I think what it does do is kind of raise the question about what the total addressable market is. And I think that's where, we kind of had a real investor reset last night when Netflix told us that they were already very, very highly penetrated. So they talked about the 220 million subscribers that they have globally, but then they said they also have another 100 million, households who are possibly like freeloading, with the whole password sharing issue going on, which means that they've already attained what they think is very, very high penetration. So if you look at just the U.S. market, for instance, it means they're probably already at about an 85% penetration level. So I think when you kind of then expand that, what it does is almost reduce the total addressable market for streaming subscribers. So we've been traditionally taught to think that it's about 1 billion global internet connected households. I think that market is actually much, much smaller now, kind of given Netflix's assessment of the situation. And so then that reduces the potential for all of these other streaming companies as well.
Wait, so you don't think it's the potential in terms of internet connected market globally is 1 billion? You think it's smaller than that?
I think that's exactly what Netflix was kind of trying to tell us last night when they said, penetration is already very, very high in most of these markets. And they kind of spoke around it, by talking about password sharing. But I think the basic point being that it's not the 1 billion that we're used to thinking. It's probably closer to maybe half of that, so maybe 500 million.
Why all of a sudden they're realizing this?
Yeah,
sorry.
That is the question. I think they were, this was the first time on the earnings call that we really saw management kind of lack that usual swagger and confidence, right? They really looked, like deer in headlights, not really being able to explain why you have this sudden slowdown, and they looked just as blindsided as the rest of us. So it was really an interesting picture.
Poor Tim, he's trying to get it in.
Go ahead.
Is this like an ESPN moment? Remember when those ESPN numbers were lousy and we're all like, oh my God, ESPN is over.
Media meltdown.
Right, exactly.
Media meltdown 2.0.
Okay, but ESPN's doing okay, right?
ESPN is doing okay. They're throwing off about $5 billion in EBITDA. So yes, they are.
So can we compare that? Is it apples to apples?
So I think, Carol, this is such a great question, and this really kind of brings us to, what is the future for all of these media companies? So yes, Disney included, ESPN's parent, is in the midst of the streaming pivot. We know that linear TV is kind of, I don't want to say it's dead, but it's definitely not thriving. More and more people are cutting the cord. But then the streaming model is not necessarily thriving either. And so now they're kind of hit on both ends, right? They have their traditional cash cows no longer, throwing off tons and tons of cash. It's still pretty stable, but there's no growth there. And you have them throwing all this money into the streaming business, and probably the economics there aren't going to be as great as they had originally thought it would be. So, it's kind of this double whammy right now.
All right, Geeta Raghunathan.
You are amazing.
Thank you so much for joining us. Technology and media analyst at Bloomberg Intelligence, joining us from Princeton, New Jersey. Let's go from Princeton to Washington, D.C., where we talk to Nancy Lyons for a check of world and national news. Hey, Nance.
Thanks, Tim. Defense Secretary Lloyd Austin is welcoming his Polish counterpart to Washington, where their main topic of discussion is the war in Ukraine. Poland's Minister of National Defense, Mariusz Bolszczak, says Russia must be held to account.
With great concern, we are observing everyday Russian attacks in Ukraine. I trust that Russia will be held accountable for all its war crimes, especially acts of genocide against the civilian population.
Mariusz Bolszczak says Poland is increasing its defense budget and welcoming U.S. troops to its bases. Treasury Secretary Janet Yellen and Ukraine's finance minister walked out of a group of 20 meeting today as Russia's representatives started talking. Several finance ministers and central bank governors also left the room, according to those who were attending the private meeting. The hot housing market appears to be cooling as Bloomberg's Irv Chapman reports sales of previously owned homes declined last month by 2.7%, according to the National Association of Realtors.
The rise in interest rates is having an impact, Diane Swank, chief economist at the firm Grant Thornton, said in a Bloomberg interview.
We really are seeing all-cash investors crowding out first-time buyers. The run we've had in housing and some of the hottest markets with 40% year-over-year gains, they'll probably be producing declines by the end of the year. Overall home values, I think, will be flat for most of the country.
Swank said current homeowners are not likely to lose equity, and increased home building is what's needed. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by 2,700 journalists and analysts.
All right, Nancy Lyons. Nancy Lyons in our DC newsroom with World and National News. We mentioned how the Netflix news is really putting pressure on all of the streaming companies. Disney is got a lot of moving parts, but it's also feeling the pain. It's down about 5%. Having said that, Disney right now is in the crosshairs of so much politically.
Yeah, it is. We've been covering this story for a few days. Florida Governor Ron DeSantis has made a move to escalate a dispute with Walt Disney by terminating its iconic theme park's special privileges. It leaves $1 billion in municipal debt hanging in the balance. Even the bill's Senate sponsor said it's too soon to say exactly who would pay back the debt.
Yeah, it's kind of interesting, but how something is getting political, but now it's becoming a business issue, right? And
it is. It's also becoming an issue for, states duking it out for, which companies they're going to try to attract.
Yeah, exactly. Bills quickly introduced in both chambers. We're talking about in Florida yesterday that could terminate all special districts that were enacted in Florida prior to 1968, including the Reedy Creek Improvement District, where the company's Walt Disney World Resort is based. The measure was approved by the Senate today and will now move to the House before being sent to DeSantis for his signature. This surprise announcement could have major consequences for Disney.
Yeah, the company's had to maneuver a heated dispute with DeSantis after the company criticized a law that limits school instruction about gender identity and sexual orientation. The Reedy Creek Improvement District has about $1 billion of municipal bonds currently outstanding, according to data compiled by Bloomberg.
All right, it's tricky. I don't know that we're explaining it as best as we can because we're not muni people, but we highly recommend that you check out this story.
I was going to say speak for yourself, but I'm definitely not a muni person.
It always gets tricky when it comes to these kinds of issues, but it's a great read by Nathan Crooks and Danielle Morin on the Bloomberg terminal. In the meantime, Colorado's governor offering Mickey Mouse an asylum as he urges Disney to leave Florida.
Yeah, we're talking
Safe
about
haven, come to us.
We're talking about Jared Polis here. He said in a tweet, Florida's authoritarian socialist attacks on the private sector are driving businesses away. In Colorado, we don't meddle in affairs of companies like Disney or Twitter.
So come on over, Mickey. Bring Minnie. Bring the whole crowd. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. S&P 500 Index now lower, little change, but down 1 point. A 233-point gain, up by about 0.7%. And NASDAQ is down 157, a drop there of 1.2%. We do have the S&P close to the lows of the day. Stocks have trimmed gains with earnings in focus. Treasuries are rallying as a number of money managers say inflation is nearing a peak and rate hike bets are overdone. Netflix shares after earnings plunging by 36.5% after the closing bell today. We'll be hearing from Tesla. Tesla now tumbling by 4.4%. Again, the 10-year 2.84%. Spot gold little changed, up less than 0.1% to $19.51 the ounce. West Texas Intermediate crude up 0.2%, 102.75 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Life imitating art, art imitating life. I used to think about that when I watched Showtime's Homeland, because it really felt that way. Not sure, though.
What about when you watched sort of cartoons?
No.
Okay.
And I'm pretty sure not many of us thought about that relationship and predictive insight when we were watching Pixar's WALL-E when that came out in 2008. Writer and director of WALL-E, Alex Stanton, addressed that in a quick take feature that was by our own Alex Webb.
You know, the funny thing we found out was, like, where do you think technology would go and why? And what ended up being our way to guess that was what would seduce you. Because we were watching it happen with the phone, and we were watching it happen with these electric scooters. It's like fast food. You know it's bad for you, but it's just seductively too tasty, and you cave.
Ain't that the truth? All right, that was writer and director of WALL-E, Alex Stanton, in a quick take feature by Alex Webb.
Alex Webb is a correspondent for Bloomberg Quick Take. He joins us on the phone from London. Also joining us is Joel Weber, editor at Bloomberg Business Week. He joins us on the remote access line from Brooklyn. Joel, good to have you with us. The comment about the phone really hits hard, considering that Stanton was at Pixar, where, as Alex Webb writes, Steve Jobs at the time spent about half of his week, so he saw an early version of the iPhone. Hard to believe that WALL-E came out all the way back in 2008, because it feels like that world is playing out for us right now.
It's really eerie, actually, what's transpired since then. You know, I remember watching WALL-E in the theater, again, in the real before times, right?
Yeah.
And even back then, it was like, oh, wow, this is, like, you know, deeply satirical. But what makes Alex's story kind of remarkable is just how much of reality now looks like what was depicted in the movie. So Alex, where did this idea come to you from?
I mean, I guess I've got to admit to my later Disney obsession, and I think that it was the real thing that drove home for me was the space tourism stuff. When last year, when we saw particularly Blue Origin taking tourists to space, and I thought, well, that's the final piece in the sort of By and Large puzzle. In the film, there's sort of monopolistic retailer called By and Large, which is basically Amazon. And they also run this space tourism operation. And so that was the sort of final straw which made me think, I've got to do something on this.
I got to say, it's terrifying. I was reading a story by our Bloomberg Green chief, Eric Roston, that talked about how carbon emissions are kind of back to where they were pre-pandemic. It's terrifying to read this. I'm curious if you were smoking anything when you wrote this, but I'm just kidding. I'm just kidding.
He's a new father of twins. He would never, okay?
No, but you hit it so much. You know, we see so much that we think, okay, this can never happen, but it is playing out. I mean, what do you think people who read this should kind of sit up and take notice about?
Quite how near in the future it was. We tend to think about science fiction as being centuries away and or 50 years away. And you know, when we look to 2001: A Space Odyssey, obviously we're 20 years beyond that, and you know, not really much of it has happened in the way it was envisioned back then. This managed to look just around the corner. And the other piece of it, though, that I found fascinating is that, yes, art sometimes imitates life unintentionally, but sometimes we it influences the way that we think about things. And the way that we decide to evolve is, of course, informed by the science fiction of the past. So, the metaverse is obviously a prime example of that. But even in this, like on a very granular level, the SpaceX rocket that launched 3 weeks ago now, taking tourists to the International Space Station, is called the Axiom. And the ship in WALL-E is called the Axiom. So this is presumably some sort of joke by the founders of the company that is taking these people to space. But there is some things that are unintentional and some things where this actually shapes the way we think about the future.
Well, what were some of the other compelling coincidences, or maybe not coincidences, things that you wrote about in the story that the similarities between what's depicted in the show and how life looks now? What were some of the most compelling ones?
Well, the people in the show, they're sort of obese, living on this spaceship. And of course, obesity levels have continued to increase and have gained pace in recent years. But also the people on the ship, they communicate through video call. They with people sometimes 6 feet away from them. And I don't know about you guys, but I've certainly been on calls, in morning calls, editorial calls, where I'm on a video call and the person at the desk next to me is at the same video call. And we're talking through a Zoom link rather than talking in person. And finally, they eat smoothies, which that's their meal replacement is a smoothie. And of course, we've seen Huel and Soylent and all these other sort of brands take off over the past decade. There's one further thing, actually, that I didn't mention either in the piece or the video simply for time constraints, but the CEO of, by and large, this proto-Amazon, is also functionally the head of state. When you think about sort of a businessman becoming head of state, something like that seems to have happened recently.
Yeah, wow. Speaking of, art imitates life. Hey, Alex, what is Andrew Stanton, the writer and director of WALL-E, what does he think about all this?
He said that he wished you hadn't been so right. I spoke for about 20 minutes. We used some of that in video, and of course I quoted him a little bit, but he said, his words were, "I usually enjoy being right, but not on this one." And he sort of was chuckling, but with a sort of wry sense of, essentially disappointment, really.
Yeah, I do wonder, like, the creative process of what they were thinking, and obviously you know where they were getting a lot of inspiration from, but he has to be
probably less about what Alex was smoking than what they were smoking, Carol.
I know. I've been to Pixar. It's a really creative place where you can kind of do whatever you want. But they've just got to be marveling at, like, for me, it's a little freaky how much they got right. And Joel knows this, Tim knows this. I joke that we're all going to be living in the metaverse because the climate's going to be so bad. Funny, but not funny, Alex. Not funny. Yeah.
The thing that was actually quite interesting as well, you mentioned in the lead here that Steve Jobs was, of course, the CEO of Pixar, and he said that Andrew Stanton told me that they actually saw the iPhone a year before it came out, that they were at a party with Steve Jobs, and he just couldn't resist showing off this sort of metal, a chunk of glass and aluminium. And the analogy that Andrew Stanton used, talking about smoking things, he said that he used to be a smoker, and that when he saw the kind of effect that even just having the iPhone for a few minutes had, and like the kind of obsessiveness that people were just sucked into it, he said it was like when he would stand at a bus stop, have nothing to do, and smoke a cigarette. Now he could see that people would be getting on their phones, and so that fed into this whole thread in the film, which I think it's ostensibly a film about two robots falling in love, but it's really a kind of fable about overconsumption and tech addiction. And those are the two, I think, they're two huge themes in society at the moment. And it is something that was informed by his proximity to Apple.
I'm sorry, Alex, did you say something? I was on my phone. No, I'm only kidding. I'm only kidding.
So depressed, Alex. Thanks.
It's just unbelievable. This is a great, great read, a great story. Joel, did you have something you wanted to say?
Yeah, we'll see you in space. That's the next shoe to drop, I guess. Only it'll be floating in space.
Isn't that Elon's plan, right?
Yeah, Elon.
We got to get off of Earth?
Yeah. All of the above.
Happy Wednesday, everybody. Alex Webb, thank you so much. An incredible write, an incredible read. He is correspondent at Bloomberg Quick Take. Check out his feature piece, too, on Quick Take. Joining us from London, Joel Weber. He's the editor of Bloomberg Business Week. And this is Bloomberg Radio.
the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. 60 minutes left here in the trading session. Romaine Bostick, Taylor Riggs, Gina Martin-Adams, special guest host today in for Caroline Hyde, and we welcome in our Bloomberg audiences across Bloomberg TV and radio and YouTube for our global simulcast with Carol Massar and Tim Stenovic. Carol, looking at,
Not Netflix just yet.
We're everywhere, but not on Netflix.
Not Netflix. Well, we could be on that pretty soon. That would definitely give us a little bit of a bump here with regards to what's happening. I mean, you see Netflix shares down 37%. You see the broader market kind of struggling for any real traction here, Carol. A lot of concerns here. I guess about the earnings picture, which I thought, with maybe the exception of Netflix, thought looked pretty good.
I thought so too. I really feel like, look at Brian Moynihan of Bank of America. He seemed pretty upbeat in terms of some of the comments about what he had to say about consumers. Housing stocks, man, they were up almost 2.6%. They're off their highs, still up about 0.8%. But we did see sales of previously owned homes falling to their lowest since 2020. U.S. mortgage apps down for a 6th straight week as mortgage rates climbed to a 12-year high. But I always find it interesting that on that negative kind of fundamentals that, Tim, we continue to see investors move into those home stocks.
Yeah, just before we go any further, I do want to sort of mention there's a big stock moving right now is Rite Aid, ticker RAD. Those shares are up about 33%. They had been halted just a little while ago. There was a report out of the New York Post basically fueling some rumors about takeover speculation there. Nevertheless, those shares up about 34%.
Pretty active trade, it looks like, too.
Yeah, well, you mentioned Netflix, Romaine, and it's certainly today's equity trade has Netflix all over it. I'm watching the Vanguard Communication Services ETF. It's down more than 4% today, having its worst day in more than a month. Thanks to Netflix, it makes up more than 4% of its holdings. It's also being pulled down by other media and consumer communication services like Meta Platforms, Paramount Global, Roku, Disney, and more. Down 4% right now.
I don't understand the drag down in Meta Platforms. Why is that getting caught up in this?
A lot of tech stocks are getting caught up in this, but I don't know. I mean, we'll have to wait till we hear from Meta about what its earnings look like. But a lot of tech stocks getting hit today.
Well, I'm curious, Gina. I mean, what do you think about this? Are people really concerned about some of the valuations here, or is there something more to it?
No, I think it's a continuous concern about valuations in this space. I mean, the peak was all the way back in last fall. Remember, Netflix traded nearly $700 back in the fall months, and we've seen it more than halved over the course of the last several months. And a lot of that is the growth outlook, but I think it's predominantly about rates and what's happening with rates. I mean, when you see interest rates moving higher, that long-dated cash flow companies are going to underperform. That was what we saw throughout January. We're seeing it again as yields continue to rise.
So I'll pick it up from here, of course.
Guys, come on, perk up here. Look
Romaine, do you want to walk us through the majors?
Watching Netflix?
Let's walk you through the majors here. Look, we're looking at S&P 500. It's basically flat on the day. It had been higher for a good portion of the day. Had been trying to sort of hold its own here. But we talk about what you just kind of mentioned here, Tim. It's not just Netflix down. You got the Tesla, Meta, Amazon, Nvidia, Disney, Alphabet. Basically, all your favorites are in the red. That's a big part of the reason why you're looking at a little bit of a red here on the S&P 500. The Dow is holding its own up about 0.6%, as is the Russell 2000 up about 0.5%. We should point out that once again, the outperformer, at least as far as the major indices go, is actually the Dow Transportation Average, which is not an index, it's an average, I'm told. But look, all those airlines are higher once again.
Who are you?
Transports.
Who are you?
See, we are in Bizarro World.
Romaine, he is Bizarro World. Let's go to Bizarro World of sort of
that for the fans. They love it.
Sector levels remain of the S&P 500 as we dive down a little bit. And it's everything that we already know. Technology's at the bottom. You're off more than 4%. Discretionary, though, also here, of course, at the bottom as you think about maybe, again, further continuance of this defensive trade remain with real estate, staples, healthcare, utility. Those are the big winners on the day. We've talked a lot about sort of the long-term trend of yields climbing. Today, though, we should know you do have those falling.
Yeah, we have those falling. Obviously, Netflix, sort of the granddaddy of them all with regards to the decline here, down 36%. At one point on the day, it was down the most going back to 2004. Some of the other stocks getting dragged down, like Paramount, down about 8%. To the bright side, though, this kind of got overshadowed yesterday by Netflix earnings after the bell was IBM. IBM actually reporting a relatively decent quarter, of course, with that transition to more of that hybrid cloud platform. Those shares up about 0.7%. And how about advertising? Believe it or not, advertising actually doing well despite a lot of sell-side analysts who've been talking down on it. Omnicom Group reporting earnings, and they impressed. The shares up about 5%.
Can I just say, who'd have thunk, right, that IBM would be rallying like it is, and Netflix would be selling off.
Yeah,
like
look at
old
that.
new, right?
IBM and advertising. Those are the bright spots.
Right?
Well, listen, I think that investors are focused more than just on tech, even though the tech space has been so captivating over the course of the last day and change. The financial sector really kicked off, as Carol mentioned, earnings season, and kicked it off in pretty strong fashion. But the space really has struggled to move higher. Even though the yield curve has moved a little bit higher, it's just not enough. And this chart shows financial sector valuations compared with the yield curve. We need more upward steepening in the yield curve before we can get a bid for financials again. And remember, coming into this year, this was investors' favorite sector for 2022. It's been a bit of a disappointment, to say the least. And I think the yield curve is largely responsible. So keep your eye on that yield curve.
Well, Gina, everybody, and certainly the Fed, keeping an eye on that yield curve. And you talk about struggling. And Neil Kashkari, president of the Minneapolis Fed, he actually talked about the Fed outlook and said it's really complicated. Here's what he had to say.
1 year from now, that's a really hard forecast to make. I mean, we have to make forecasts, and we do our best. But things like China, supply chains, new variants, what happens in Ukraine, those are giant elephants that are going to determine what happens to our economy as well.
And that is a discussion, a town hall that was held by Luther College. Of course, Neil Kashkari of the Minneapolis Fed. I think the important story, Tim and I talk about this a lot, is that it is so tricky right now, the things that are coming at everybody, and that we just have to kind of take it day to day, week to week, what CEOs say about earnings, what Fed members say about the outlook. It's just tough.
Yeah, China, supply chains, variants, Ukraine. Where does that sound familiar? Very similar to what we heard from the IMF yesterday.
Yeah, we're going to have a great economic conversation, of course, here in the U.S. as well with Brian Deese, of course. When we think about Romain, all of these economic influences, then of course when you think about a Fed looking at 50 basis points in one or two or more meetings, how does that play out on the economics?
Well, yeah, I mean, of course, and this is what what the market has priced in for that May meeting and again for that June meeting. The big question is how resilient is the economy to withstand that? You talk about where neutral rate is. Is it at 3%? And if it is at 3%, is the economy not strong enough to handle a 3% Fed funds rate?
Beige Book said growth, right? Pretty moderate. What is it? Moderate pace. And that was kind of an upgrade from modest to moderate the last time around.
So it went from moderate to modest, or modest to moderate?
Modest to moderate to moderate to moderate. Only. They got rid of modest. So I guess that's a little bit of an upgrade.
Okay.
It's all in those little nuances.
Little nuances.
All right. Does that make sense?
Happy 420, by the way.
Happy 420. All right. Maybe we all are smoking a little bit of something. All right. We got to run. We'll be back, though, in less than an hour's time. It's a little bit of a wacky Wednesday.
Show, I think.
I think we're doing okay. All right. We'll be back with Beyond the Bell, our cross-platform. We'll count you down to the close on this Wednesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It is really funny when you get like the Beige Book, right? So they went from modest to moderate growth last time around to now they're saying growth expanded at a moderate pace, and that's a little bit of an upgrade.
I'm still going to go back to what Eliza Winger from U.S. economist for Bloomberg News pointed out. Shout out to her. She read this so quickly, right? This thing crossed, and then she saw it. I asked if there were any sort of red flags or moments that give her pause. She did say that contacts in a few districts noted negative sales impacts from rising prices. I think of two words there,
You're a
Carol.
negative Nelly, man. That was towards the bottom.
Demand destruction.
But she also talked about the housing market, real estate activity accelerating modestly, consumer spending accelerated among retail sales and services.
The glass
There's
is
a lot
half
of
full,
positive.
but it's still only half full.
What do you mean?
There are still some issues in terms of high prices.
So P&G raised prices.
Yeah, they could pull it off.
Hi, everybody. Welcome to the Bloomberg Business Week debate with Carol and Tim. No, but I mean, look at P&G raised prices. They had a sales beat.
You know who else raised prices?
Who?
Netflix.
I know, but is that an isolated?
No,
like there's a lot of reasons.
It is. You're right. You're right. There are four reasons.
Aren't you getting tired of all these streaming services? Like I open it up and I'm like, where is everything? And
we did quit one this week.
See?
Yeah. We weren't watching it.
TBD. Football season's over.
Yeah, football season's over.
But I mean, do you do that? Do you binge, watch what you want? We've done that. You know, you binge on something, watch it, and then you cancel it.
So what I talked to David Weston about before our program started was that Netflix has always prided itself on how easy it is to quit. You don't have to call a phone number. You don't have to. You just go there online and quit.
And unless you have content that just keeps people there, it can be tricky. All right. Anyway, let's get back to world and national news. A lot going on there. Nancy Lyons has it all covered. She's in our 99.1 newsroom in D.C. Hey, Nance.
Thanks, Carol. Ukraine's Foreign Minister Dmytro Kuleba speaking on Bulgaria's BNT TV says Ukraine will not cede any territory in negotiations with Russia. That's even though Russia has stepped up its offensive in the eastern part of the country. Ukraine is expected to be the topic of conversation tonight when President Biden hosts a dinner at the White House with U.S. defense officials. More than 5 million people have fled Ukraine since Russia's war began. That's according to a spokeswoman for the United Nations Refugee Agency, Shabia Mantou.
This is a staggering amount of people that are have had to leave their homes, their possessions, in some cases family members behind. So millions of families and millions of lives have been shattered and their lives have been torn apart by this war.
Shabia Mantou says Poland has accepted the most refugees at more than 2.8 million. Well, with famine and now a war impacting food supplies, World Bank President David Malpass is calling for the release of food from global stockpiles.
I don't expect an international agreement on food. What I hope and expect is that many countries will step forward with individual solutions to alleviate the food crisis and the fertilizer crisis.
David Malpass says he expects the food crisis to possibly last into next year. The masks may be coming off on public transportation, but a new poll finds a majority of Americans still want a mask requirement on planes and other shared transportation. The poll by the AP Nork Center finds 56% of Americans favor the mask mandate. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Carol Masser along with Tim Stanovic. I'm making a lot of smoking, if you're smoking something, references because it's 420. So guys, don't freak out. It's just what's going on.
Speaking of 420, Elon Musk. When he tweets, a lot of people who cover Elon Musk have to write a story.
Yeah, exactly.
Because, especially when he's in the midst of a more than $40 billion takeover of Twitter. Because a tweet that he sent recently has given fresh fuel to speculation he would launch a tender offer for Twitter Inc. shares in the event that the board resists his proposal to acquire 100% of the company and take it private. I have to tell you something funny from Monday when you weren't here. I think it was, he tweeted over the weekend, "Hold me tender."
Yeah.
And, I think a lot of people thought about the tender offer, but Creedy was in here filling in for you, and she said, my first thought was chicken tenders.
No!
Yeah, which I thought was very funny.
Well, it's just like,
But it's also a meme stock reference, too, right? Chicken tendies.
That's right. So that was fair.
Yeah.
There's a lot going on here. And when it involves Elon, he pulls from the old and the young. You know what I mean? He really is amazing in terms of pulling kind of traditional investing Wall Street into the new world. Anyways, he did tweet out a cryptic message with blank space for a word followed by the phrase, "Is the night the missing language may be tender," as per the F. Scott Fitzgerald book title, or it could be tonight, as Musk used 7 underscores for the blank space.
Shout out to Mrs. Johnson, my junior year high school English teacher.
Senior
Senior year, actually. That's when we read Tender is the Night. His habitual style on the social platform has been to express himself through web memes and implications, having previously tweeted, "Seize the memes of production" in the time between his initial investment in Twitter and the SEC filing that made it public.
All right, from Musk to Buffett, there is no transition, but the California Public Employees Retirement System, the largest U.S. public pension fund, CalPERS, saying it plans to vote for a shareholder proposal that Berkshire Hathaway select an independent chairman, marking a rare rebuke of billionaire Warren Buffett, who's both head of the board and the conglomerate's CEO.
Berkshire opposes the proposal, saying last month that Buffett should continue in both roles.
Interesting stories. Check them out at Bloomberg.com. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We've got 43 minutes to go ahead of the closing bell. The Dow, the S&P, they are both higher. NASDAQ on the minus side, been a choppy day. Let's get all the details as we head right over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed today amid that plunge in Netflix. Dow's currently up 287 points. S&Ps are down 4, while NASDAQ is lower by 132. The U.S. 10-year yield falls to 2.84%. Gold is little change. Bitcoin is lower by 0.8%. And among the main 11 S&P sectors, leaders were real estate and consumer staples. Telecom was under pressure. Leaders to the upside in the Dow, IBM, Cisco, and Procter Gamble. Disney fell 5% and led to the downside. And after earnings, Netflix plunged as much as 39%. That's the most since 2004. In deal news, the New York Post said that Rite Aid rejected a $14.60 a share offer from Spearpoint. And wrapping things up, Tesla reports after the bell. Live from the First Breaking News Desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill. And to hear live breaking news over your Bloomberg type squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So you know we're in the middle of earnings season. A big one, of course, last night, Netflix. More big earnings to come. And tonight we've got Tesla reporting in less than an hour's time. And amid the flurry of nonstop tweets, it seems, and stories about Elon's offer to take Twitter private, just so much out there in the atmosphere when it comes to Elon. It makes me wonder, Tim, what exactly do we need to focus on when the company reports after the close today?
Fortunately, that's a question we can pose to Dana Hull, technology reporter at Bloomberg News. She joins us on the phone from our San Francisco bureau. Dana, with respect to all of our colleagues here at Bloomberg, I just told Carol that you write the best earnings previews here because you give us 5 things to listen for. They include China, Cybertruck, full self-driving, mining, and all that uproar over the mobile charger. What, though, is the most important thing that we should listen to?
China, for sure. So, Tesla has a factory in Fremont. It just opened 2 new factories in Austin and Berlin. But its main factory right now, in terms of number of cars that they produce, has been China. And as we know, because of the COVID scare there, it has been locked down for at least 3 weeks, and production was at a standstill. So that every day that they are not making cars, Tesla is basically losing production, losing money. And, we've all been very focused on Elon Musk and what his plans to buy Twitter, but what is happening in China is front and center for investors, and I really hope that they address this on the call today.
All right, so China. How do we kind of cross that with what we heard, Dana, earlier this month, right? The company posted record first quarter deliveries despite all those disruptions, including the
a lot of those
shutdown
went
of
to China.
Right, of the Shanghai factory. So how do we square all of that?
Well, so Tesla had a great first quarter, which we saw when the delivery figures were released, and the earnings report should be good. I mean, investors and analysts are expecting a profit. I would look at gross margin, but Tesla earnings is sort of a unique animal in that it's all about the forward-looking statements. It's all about what do they say going forward. It's all about the commentary on the call. What kind of mood is Elon is? Is he ebullient? Is he grumpy? So people are going to be looking for clues to what does the second quarter have in store. And, we know that China has been an issue. We know that Tesla just raised the prices for its mobile wall connector. There's inflation. I mean, so there's still supply chain stuff. So, people really listen in to sort of figure out what should they expect for the second quarter. The first quarter was probably fine.
Dana, do we know that Elon Musk will be on the call today?
Yes, he will be, which is funny because, he made this big thing of I'm only going to be on the call when I have news. And he's never missed a call. There was one call that he was not on last year, but he was on in January, and he tweeted that he would be on today.
So are all the questions from analysts, are they, are not all of them, but are there going to be questions about Twitter too?
I mean, I feel like you can't ignore it. I would hope that an analyst would ask about it. At the same time, I think Musk risks diluting the Tesla brand if he starts mixing his interest in Twitter with Tesla. It raises a lot of questions about succession planning and his attention.
But yeah, I would imagine that someone's got to ask him, right? It's the elephant in the room.
Right, because, we want, I don't know if this is like an oxymoron or something. We want a focused Elon Musk, I assume, right? So if he's too distracted, or is this just, you cover him, Dana, so much. He does seem like someone who thrives on having his hands in so many different pots. But I do wonder, could Twitter be one of those distractions that's not a good thing?
Yeah, I think, like some people, one attitude is like he's bored and this is his new shiny thing. Another perspective is, well, Tesla's doing really well now, so now he can move on to his next thing. It's a sign that Tesla has matured if he's wanting to wade into a social media thing. Another theory is that, yes, he's the richest person on the planet, but like, what kind of mogul are you if you don't own a media outlet? And he's trying to sort of go toe-to-toe with Bezos in terms of having a content operation. So, there's a lot of theories as to why he might be interested in this, but, he has never been a full-time CEO, and he already has quite a lot on his plate, and, if he manages to buy Twitter, which is still very much in doubt, is he going to be the chair of Twitter's board? Is he, we still don't really know what he's got in mind beyond what he's tweeted about and what he said at TED last week.
Okay, so I want to go back to Tesla because we only have a minute and a half left with you, Dana. We saw it with Netflix. It's always about subscriber numbers. We already know deliveries, at least for the most recent quarter from Tesla. What is the metric that moves the company's stock typically in earnings?
Well, gross margin is a big one, but also any clarification on the outlook for 2022 deliveries. They always talk about sequential growth, but now that we know that China has been an issue this quarter, what do they say? Are they going to deliver 1 million cars? Is it 1.5 million? Do they backtrack at all? I would look at those two things.
All right. Is there anything that can shock you at this point with Elon Musk on this call?
I just have to, I just try to stay nimble and open-minded and not get too wedded to a narrative. Things can change very rapidly.
It's pretty remarkable. What?
Can we end with mining and refining? Because there was the recent tweet where earlier this month where he tweeted about prices of lithium. What should we look for in terms of supply chain here? Because it's so important for Tesla.
It would not shock me if they just sort of as an aside were like, oh yeah, we acquired a mining company, or we decided to acquire a mine. They are hiring geologists. But usually these acquisitions have been fairly small. So I don't know. Yeah, that'll definitely be something to listen for.
Right, because he did tweet about that, right?
Yes. He put the mining industry, he put the mining world on alert that he wants prices to come down or they're going to get into it themselves.
It's I love the way he just pokes. It's just kind of fun.
Keeps Dana busy too.
Oh my God. We are so grateful for her reporting and writing. Our own Dana Hall, she's Bloomberg News technology reporter, knows all things Elon, Tesla, you name it. And I used the word nuance earlier, but she does. She gets the nuances of him and his company. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, it is Bloomberg Business Week. We are getting ready soon to wrap up the trading day, but not before we check out the chart of the day.
Kriti Gupta is going to be joining us, and it's a special day for Kriti because it's her birthday.
On 420 day?
Yeah, 420 birthday for Kriti Gupta.
Oh, I wonder if the chart is connected.
All right, we'll have to wait and see because I actually don't know what the chart of the day is yet. But we'll get to that in just a minute. First, less than a half hour to go to the close of trade. Charlie Pellet, give us an update.
We're keeping an eye out for Tesla. 28 minutes to go ahead of the closing bell. Tesla. That will be the big story after the closing bell. Yeah, we got you covered. We'll be all over that. Tesla shares tumbling ahead of the report, now down by 4.5%. While we're talking earnings, look at Netflix shares. They're down now by 36.2%. Netflix plunging today after last night's earnings report. S&P right now higher by 5, up by 0.1%. The Dow up 329, up by 0.9. Netflix certainly weighing on NASDAQ. It is the laggard, the leading laggard. Right now we have got NASDAQ down by 1%, tumbling 135 points. 10-year yield at 2.85% right now. Spot gold up $4.50 the ounce to $19.54. West Texas Intermediate crude up 0.2%, 102.75 a barrel. Earnings in focus. Treasuries rallying as a growing chorus of money managers say inflation is nearing a peak and rate hike bets are overdone. Abbott Labs posted stronger than expected first quarter profit and revenue fueled by high demand for its COVID-19 testing products during the winter Omicron surge. Abbott Labs shares, they're up now by 2.4%. A poll from the AP NORC Center for Public Affairs finds a majority of Americans continue to support a mask requirement for people traveling on airplanes and other shared transportation. And as masks come off, there is renewed debate over how to refer to the risks surrounding COVID. Dr. Bhakti Hansadi is Associate Professor of Emergency Medicine at the Johns Hopkins Bloomberg School of Public Health.
Well, definitely not seasonal virus, right? Because we haven't established a seasonal pattern with COVID like we have with influenza and the cold. So not a seasonal virus. It's definitely a respiratory virus. And it does still cause some deaths. In the United States, we still have an average of 450 deaths per day. Now, that is not an unsizable amount. And so it's a potentially fatal respiratory virus that we have effective treatments for.
Dr. Hansadi with the Johns Hopkins Bloomberg School of Public Health, which is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Pfizer shares down now by 1.3% among vaccine names. Its German partner BioNTech, its ADRs up down 4%. AstraZeneca's ADRs are up 0.8%. Moderna lower by 1.8%. J&J, Johnson & Johnson up by 0.4%. Recapping stocks mix, 10-year yield 2.85%. S&P up 0.1%, Tesla tumbling 4.7%. And that's a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Well, as we do each and every day, we check in with Kriti Gupta for her chart of the day. If you still haven't signed up for Kriti's chart of the day, just send her an email. You can do that at kgupta129@bloomberg.net. Also, check her out on Twitter and Instagram at Kriti Gupta News. I should have known, Kriti. Your chart of the day focuses on the story that everyone is talking about today and why we're seeing a lot of equities lower today.
Did anybody even suggest you do something different today?
No. Well, actually, yes. World Economic Forum stuff, a lot of eco stuff, which, of course, is very heavily watched. But I feel like Netflix is the bigger story.
Huge.
It's huge. And remember, this is not the only earnings story today, right? We had Procter Gamble, we had IBM, both posing some pretty good earnings. And if you actually look at Netflix, which, by the way, the worst performer year to date in the S&P 500 and the NASDAQ, which was not the case yesterday. So this is really in just 24 hours, the entire dynamic has changed. What's important to me here is that I think maybe 2 years ago, we would have said, if Netflix is showing these kind of numbers, 200,000 lost subscribers in the first quarter, expecting 2 million lost subscribers in the second quarter, that is suggesting the end of the consumer spending, discretionary spending, perhaps inflation eating into that, the pandemic boom over, a lot of doomsday scenarios from a macro perspective. And yet, the rest of the market, take out tech, is rallying. It's higher, which to me suggests that you really are seeing this interpreted as a Netflix-specific story off competition, off the tech story. Go for it.
Okay, well, how do you explain the rest of tech getting hit today? Because it was a question we posed earlier to Gina Martin Adams, and she talked about rates.
Yeah, well, it is going to be rates, right? Because I think the last time I checked, I don't have it in front of me, but I believe the last time I checked, the 10-year yield was up like some 9 basis points or something. So remember, just because yields are higher, say 3 or 4 basis points, does not shake the entire market. It's when it's 9, 10, 17,
Right.
like those numbers really shake the market. So I think that's part of the story as well, especially because on that kind of, on a day like today, you are also seeing real estate, consumer staples, financials all higher. Those are all yield-driven sectors, and those are the ones that are actually outperforming the most. So I think that's going to be a really important conversation. But I don't think Netflix is completely isolated. It's not a totally singular story because there's so much that the market's still watching when it comes to Netflix, right? They're talking not just about the streaming business, but if Netflix is kind of this beacon of the pandemic boom you saw in the last 2 years, does this signal some kind of end to the rest of the growth?
Well, and it's interesting when we keep talking about getting back to so-called, right, normal, quote unquote, normal, like, is this a sign that we're getting back to normal? And I think about the Beige Book. People are still spending on retail, but they're also spending on services, right? So we're kind of stepping out into the world in a much more aggressive way. We all talk about traveling. We're traveling, Timmy and I, more. You did some traveling, right?
You actually went somewhere for fun.
You did both, right? Work and fun.
Oh, yeah, that's
Yes,
true. You
lots
did.
of travel. I miss my puppy.
So,
But
but you do wonder, like, it's funny, it's not funny, but you look at this chart, and it's tough for everybody on radio, but, you know, you see the subscribers, it's all this green, and there's growth, and
I mean,
blah,
there was
blah,
a recent
blah.
quarter with
And-
over 15 million new subscribers.
Right.
That's
And-
what we're talking about.
And then you have this little red line, like you almost think it's a mistake.
yeah, I mean, listen, 25 million subscribers a year on average, going back to 2011. And then, even then, 2011 was really the only red you're seeing on the screen. And folks, I'll send this out to you, I promise, right after I'm done with this segment. But in 2011, it was when they were switching from the DVD mailing business to the streaming business. And that's really where they were kind of punished for it.
Right.
Arguably, the same thing is happening now when they're essentially changing their business model by saying, we're not just going to rely on this original vision of consumers and subscribers, but now perhaps more on an ad-based business. So I wonder, just a thought, is Netflix going to perhaps now trade in line with Snapchat, Twitter, that are other ad-based businesses?
Interesting. Okay, that's a question we'll ponder. Just in the last 30 seconds we have with you, Creedy, your Ion story today is about positive U.S.
I thought we were
real
going to
yields.
wish her happy birthday.
Oh.
We did do that.
Yeah, we
didn't
did. Happy birthday.
Thought maybe
Thank
we'd
you.
sing.
I appreciate it.
Maybe
Feel
we won't.
free.
Okay.
I love to
don't
hear
have
that
the rights
voice.
to the song. I can't
Okay,
sing.
go ahead. For Ion.
Positive real yields, potentially changing up markets. I mean, listen, this has been a story for a while. There is no alternative.
We've been
right?
waiting, right?
Yeah, there is no alternative. The only place to get return of stocks, that is not the case anymore. Real yields have turned positive. So perhaps a bull case for the bond market that's also seeing, I believe it's worst returns on record last quarter. So a lot going on there.
It was really rough in the first quarter. And it was interesting. I was reading through something, too, where people were like, okay, maybe diversification is back, right? And it hadn't been that case. It was
Maybe.
just equities.
But I mean,
Maybe.
remember, it's also the real yield got into positive territory and then went negative. So we'll see.
Well, happy birthday. Have some
Thank you.
cake. Have some fun.
Thank you.
Take the puppy for a walk.
That's the plan.
Okay, good stuff. All right, Creedy Gupta there, our Bloomberg Markets correspondent.
Let's go to Washington, D.C. now for a check the latest world and national news with Nancy Lyons. Hey, Nance.
Thanks, Tim. As Ukrainian forces continue to hold on, defending the southern port city of Mariupol, Secretary of State Antony Blinken says the latest offers by the Russians of offering humanitarian corridors might not be credible.
What gives pause is the fact that there have been agreements on humanitarian corridors established before that have fallen apart very, very quickly, if not immediately, simply because the security has been violated by Russian forces.
Blinken was speaking during a summit on migration in Panama. The Biden administration is hiring federal workers to go to rural communities to help residents access the federal resources available to them.
Federal workers are fanning out across 5 states, Georgia, Kentucky, New Mexico, Mississippi, and tribal nations in Arizona to help rural communities. The latest push to spread the word about the bipartisan infrastructure law and COVID-19 relief funding. The locations were based on need and readiness, but some are also states with potentially hot midterm races coming up. The initiative is being led by the Agriculture Department. It aims to expand to all 50 states if Congress signs off on the budget. In Washington, I'm Amy Morris, Bloomberg Radio.
The South Carolina Supreme Court has issued a temporary stay halting the state from carrying out plans for its first ever firing squad execution. Today's order by the state's high court temporarily halts the scheduled April 29th execution of inmate Richard Moore, who is on death row for killing a convenience store clerk. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Nancy Lyons in our 99.1 newsroom in the nation's capital with world and national news. A lot going on. It's interesting to watch the markets. We were just talking about, real yield when it comes to the Treasury market. We've seen yields move up so much, and yields were so, negative for such a long time that it was the only game in town was stocks. But now maybe stocks getting a little bit of a run for their money, which might explain the trade today.
Yeah, except for technology, which is being pulled lower by those Netflix earnings. The Nasdaq down 1%, but the S&P higher by 0.1%.
I don't know if you saw this earlier, but Amazon Web Services is starting a $30 million fund for underrepresented founders. So that was one of the headlines we saw across. For more on that, let's turn things over to Bloomberg technology anchor Emily Chang. She is catching up with Amazon Web Services CEO Adam Selpisky now on Bloomberg TV and radio and YouTube.
Hi, I'm Emily Chang in San Francisco, and welcome to our television, radio, and YouTube audiences. The AWS Summit kicks off today here in San Francisco, and Amazon has a slate of new announcements, from 37 new renewable energy projects around the world to a $30 million commitment to startups led by diverse founders, this part of their Impact Accelerator. Joining me now to talk about the future of AWS, the cloud, and more is the CEO of AWS himself, Adam Selipsky, here in the studio. Adam, great to have you back with us here in person.
Great to see you, Emily. So great to be back with you.
So you're almost a year into your tenure now as CEO of AWS, and you took over from Andy Jassy, who turned it into a juggernaut and is now your boss. Have the day one jitters wore off, or is the pressure still on?
Well, my day one jitters were back in 2005. I actually came to Amazon to help start up AWS alongside Andy in 2005. That was about a year before we started serving paying customers.
Right. This is before people knew what AWS even was.
Yes, and I got asked a lot back then, what does this have to do with selling books? And of course, the answer was, it's got nothing to do with selling books, but the technology we use to sell books has everything to do with building these services that both Amazon as well as every external organization in the world needs. So I had 11 years at AWS, unexpectedly found myself leaving for 4.5 years to be the CEO of Tableau, and then had an opportunity to come back, as you said, almost a year ago, this time as CEO of AWS. So it's been fantastic to be back. There's been a lot that's familiar. Of course, there's also things that are new, given how much AWS has grown. So it's a great combination of the familiar and new learning experience for me.
You last told me it is still early days for the cloud, even though you joined AWS those many years ago. FMI now predicting the cloud computing market could hit $1.9 trillion by 2032. I've seen estimates that pegs AWS at 40% of the infrastructure market. Does that percentage go up or down in 10 years?
Well, it's so true that we really are still at the very beginning of cloud adoption. Depending on which estimates you believe, we might be at 5% or as high as 15% of IT workloads moving to the cloud. So now there's a lot of dollars spent on IT, so there's been a fair amount of movement. But in percentage terms, the vast majority of big enterprise workloads are still to move. And I think that if we do our job, if we do the best at understanding customers and then rapidly innovating and rapidly building what they need, and of course being highly secure and highly available, then I think our segment share should absolutely be able to be maintained or potentially even increased. But that'll be a question of how well we can do our jobs.
AWS had two pretty big outages late last year, each with its own lessons. How much does that hurt if it means customers going to Microsoft or Google instead, or maybe choosing multiple cloud providers?
Well, availability is absolutely critical. I mean, our first priority is always security, and immediately following that, operational performance, including availability. And overall, if you look at the 16-year operating history of AWS, and even if you look at shorter periods, the last year, the last 3 years, we've been highly reliable, we've been highly available, we've had better availability track records than other large cloud providers, certainly better than really any enterprise I've talked to has been able to achieve in their own data centers.
So any evidence you've lost customers as a result of those outages?
No, we've had a lot of conversations. I mean, we had a couple days, of course, in December, which were not good operational days, and we own that, by the way. We don't run away from that. And we learned from them and have been really trying to take whatever lessons we could to make ourselves even more reliable. But as we've talked to customers, they've really all understood that while we don't like what happened on a day like that at all, because of our customers' hurt, we feel the hurt too. That we really have a very strong track record, and that keeps the partnership strong.
People have been asking for years whether AWS should be spun off from Amazon. Do you spend any time thinking about this or thinking about the hypothetical benefits?
Really only with folks like you, as it turns out. No, honestly not. We have no current plans to spin out AWS. We think that our customers are very well served by having AWS be a part of Amazon. In fact, an increasing number of the conversations I have with particularly big enterprises, they want to make use of the capabilities that Amazon has across the company, whether it's energy companies wanting to sell us power, whether it's auto manufacturers who have electric vehicles that we need for our delivery fleets, whether it's telcos who want to deliver 5G-enabled services to their consumers around things like entertainment and Amazon Prime Video.
Okay, but Andy Jassy might have said he never thought about a stock split. And recent events show that even in this environment, sometimes we have to revisit those sacred cows. Has the idea of a split ever come up in a conversation with Andy or Jeff?
It's really not a topic of conversation. We're very squarely focused on the way we're operating today. We honestly do not have any plans of which I'm aware to really entertain a split off of AWS. We think the way that we're organized now is actually very good for customers.
That said, the market is changing. Valuations are dropping if you look at what's happening in the macro environment. How is this impacting your strategy around acquisitions? We've seen Microsoft be really opportunistic.
Well, we've very consistently done acquisitions over the whole history of AWS. I'd say that overall our strategy has been to do smaller tuck-in acquisitions. Part of that is because we're trying to build a complete infrastructure platform, and we want the whole thing to operate as a single platform. And I think sometimes these big, bold acquisitions don't end up working very well technically, and they don't integrate well for customers. So we're very open to acquisitions of all sizes. We're very willing to be aggressive if the right opportunity presents itself. To us, it is always starts with, is it a great thing for customers? Can we integrate it really well? And then valuations would only even come into play and only even be a question if we like the answers to how does it fit from a business and customer perspective.
All right, we're here with AWS CEO Adam Selipsky. Speaking of that, there's a lot of noise happening elsewhere in the tech industry. I'm curious what you think of this spat between Twitter and Elon Musk.
I've been pretty focused on my own knitting. I haven't had any time to follow that any more than a casual spectator in the news. It certainly makes for interesting watching, but honestly don't know much more about it than that.
But casual spectators often point out that Amazon doesn't really have a social play. Does Amazon need a social play? Could a Twitter make sense?
Well, that I don't know, but we certainly, a big part of all of Amazon's businesses and our strategy in the different businesses revolve around partners and our ecosystem. It's certainly true in AWS. It's true in other parts of the business as well. So we're very close to many companies with a very strong social presence, be it as AWS customers or in our retail business for customer acquisition and customer messaging. Doing more and more in the retail business with the shopping experience using social channels. So we're very intertwined with social media companies, and I would imagine across all of our business we'll continue to be closely intertwined.
One of those is Meta, which recently picked Amazon as its long-term cloud provider. I'm curious if Meta is just giving you a piece of their business or if this is a step towards them getting out of their own data center business.
Well, I think you have to ask them that. But we've been working with them for quite a while, but we and they did announce recently that they were doing a significant amount of their machine learning workloads on AWS and would be doing more of that going forward. And we really love that as the next development in our long-term partnership with them. I do think there's a lot of things that we can do with companies like that together. The economics, the agility, the flexibility of operating in the cloud are just so strong and powerful. And even for large, sophisticated, cost-effective companies, there's still a lot of benefits to operating in the cloud. How much companies like that move to the cloud, move to AWS, will be a function of how well do we understand and anticipate their needs, and how well can we build in a way that's really effective for them for their own customer acquisition and retention.
There's a lot of new exciting technologies out there. Andy recently said that Amazon could potentially sell NFTs in the future. How do you think about NFTs, blockchain, Web3, the metaverse? Where's the opportunity there for AWS? Where do you want to play?
Boy, there's just a lot of buzzwords in that sense, aren't there?
There are, so we're wondering what the actual market opportunity is.
Fundamentally, what we want to do is to enable all of the underlying technologies that our customers, that AWS customers need to build all of those things, to build the metaverse, to build 3D computing, to build blockchain and cryptocurrency applications. And we're currently doing that. So if you look at, gaming companies are often where people start when they talk about, quote unquote, metaverse companies. And if you look at companies like Riot Games, if you look at Epic, they're both, very deep AWS customers. If you look at Meta, which is, of course, even had a name change, we're doing more with them over time, which is really gratifying. And so we also do a lot. We have blockchain services, and if you look at things like Ethereum, 25% of Ethereum workloads in the world run on AWS. So we're doing more and more around blockchain, around ledger technology, around 3D and spatial computing, which is going to be an important part of the metaverse. And the AWS strategy is to really, again, try and be as far out ahead of where those emerging metaverse company demands and blockchain and cryptocurrency customer demands are going to be, and to deliver really great innovative services.
Here with AWS CEO Adam Selipsky, AWS has said you're no longer accepting new customers in Russia or Belarus. Is that permanent?
I don't think we've made any statement about timing on that. It's first, let me say that obviously the Russian invasion of Ukraine is deeply disturbing to so many, and we really stand in solidarity with the people in Ukraine as well as those affected around the world. As a company, we're trying to do so many things, whatever we can think of to help. So Amazon has set up 2 large humanitarian hubs, really taking advantage of our distribution and warehousing capabilities for refugees, both in Europe. And we've also donated millions of dollars as a company, flat-out donations, matching employee contributions. AWS has set aside currently $15 million of AWS credits for companies involved in the relief efforts there. We're also significantly involved in online and cybersecurity efforts with various governments and countries around the world. And as part of that, we did say that we're not going to... I should also add, by the way, that AWS has no infrastructure in Russia, no data centers, no employees, and I've had a long-standing policy not to do business with the Russian government.
Now, Earth Day is just days away, and you're announcing big renewable energy buys. Your competitors are also upping the ante here. What's going to be the benchmark that really sets Amazon apart?
Well, I personally believe that climate change is the issue of our generation, and I'm really excited and gratified that Amazon is really trying to take a leadership position on sustainability. In 2019, we co-founded the Climate Pledge, which is a pledge to be net carbon zero by 2040, which is 10 years ahead of the Paris Accords. And of course, we have a lot to deliver in interim milestones on the way there. So one of the big ones is we intend to be 100% renewable energy by 2025. And we're already well over 2/3 of the way there. We are the largest corporate purchaser of renewable energy on the planet. And in fact, today, we announced 37 new power projects around the world, from the US to France to Spain to Dubai, bringing us to well over 100 renewable energy projects around the world. And when all of those come online, we will be powering the equivalent of 3.9 million US homes with clean energy.
Right. You also just announced a new accelerator to support diverse founders, and Amazon over the years has had some struggles with the perceptions around how you treat equity. You're now doing a racial equity audit. You face lawsuits about discrimination. I know you're doing new things to fight employee turnover, reevaluating salaries. You just did the stock split. As you've explored the company more in depth over the last year, what do you see in terms of Amazon culture? Do you see anything that needs to change or evolve?
Well, we always see things about every single thing that we do which make us restless and dissatisfied, and those are characteristics of builders and innovators, and we never take for granted who we are or how we behave, and we always think there's room for improvement, and we're very vocally self-critical about that. In this particular area, I'm very proud that Amazon's doing a lot of things to try and strive to be Earth's best employer, and to try and promote equity and equality and diversity and inclusion in a lot of different ways in the workplace, including, as you said, we'll be doing a racial equity audit, which will be done independently by outsiders, including Loretta Lynch, the former U.S. Attorney General. And I'm very happy to see those kinds of efforts happening around the company. AWS today announced the AWS Impact Accelerator, which is a multi-year $30 million initiative to basically provide all sorts of resources and at the pre-seed stage to founders of underrepresented groups. So we're going to start out with Black founders in a cohort. Later on this year, we will do a cohort of women founders, and it'll be not only AWS credits, it'll be actual cash, it'll be mentorship on an ongoing basis, it'll be access to experts, the opportunity to pitch investors, and really a full partnership and embrace to help them along their journey.
Good to hear. Last quick question, 30 seconds. You just signed, a number of new big customers from NASDAQ. You've got Best Buy. Who's next on your wish list? Who's the big fish, given that you've caught so many?
Well, as we discussed before, it is still early days in the cloud. So while we are the leader by a significant margin, I think that the majority of large enterprise workloads have yet to move to the cloud. So I think what you'll see is, even though there are a number who are all in on AWS today, there are a number who are still quite early in their journey. And so I think what you'll see across industries, whether it's financial services, automotive, telco, I think you'll see these big fundamental enterprise workloads over the next few years move to the cloud. And our intention is to do our jobs and have AWS be the place where they want to move.
And of course, where it's always day one. Adam Selipsky, CEO of Amazon Web Services, great to have you back here on Bloomberg. Thanks so much for joining us. I'll send it back to you all in New York.
All right, our thanks to Emily Chang there. And of course, back to the markets here. Less than 2 minutes to go here in the trading day. Romaine Bostic alongside Taylor Riggs, Gina Martin, Adams, special guest host today in for Caroline Hyde here. Keep an eye on the markets, which right now are not far off the lows of the day here. We also want to welcome in here our global simulcast here with Carol Masser and Tim Stenovic, our audiences across Bloomberg Television, Radio, and YouTube. Of course, we wouldn't leave you hanging like that on a day like today. A lot of volatility, a lot of action going on in the market, Carol.
I love that you said a lot of volatility. I've been thinking about the VIX a lot, and it's actually down a bit. It's 20 and change here, but I mean, we are seeing a lot of volatility in the markets. We're off the highs of the day, and yet we're seeing a pullback when it comes to the VIX. So I'm not quite sure what to make of it. It's a market, I feel like a mixed market, Tim, of mixed messages.
Yeah, I do want to check in on Bitcoin, which is actually not seeing a lot of action today. It's weirdly not trading with tech for the first time in quite a while. We have talked about that correlation there, but it's down just about 0.3%. We can go ahead and call that flat.
And you talk a lot about sort of if that's indicative of the sentiment change that's underway. I think, Gina, it was really interesting that we were sitting here thinking, gosh, after the negative downside of Netflix, maybe some concerns or maybe volatility around Tesla. But then Sarah Malik over at Nuveen said earnings has been very strong so far. So you have to sort of put that into perspective.
And expecting quite a few earnings after the bell, including, of course, Tesla. Also keep an eye out on CSX, Landstar, Carvana, and a few others. As we get the closing bells here in New York, you're looking at a Dow Jones Industrial Average higher by roughly about 250 points or 0.7%. The S&P is going to finish the day flat. It's down about 2 points right now as we wait for these numbers to settle. Either way, not really going anywhere here on the day. And the NASDAQ Composite coming off 2 straight days of gains, down about 1.2%, down 166 points. Obviously, one of the biggest decliners there. Netflix, which you should point out, down 36% here on the day. The Russell 2000 looks like it's going to be one of the bright spots today, up just about 0.3%.
But an odd risk-on day. Even though the market's down, it's risk-on, with transports sort of leading that Dow Jones higher. Tech not doing great, but specific really to Tesla as well as Netflix. The rest of the market sort of flat to up. So a very strange market for sure. I think a lot of big drag from still this tech sort of overhaul that we've been going through all year as rates go higher, and we really right-size our expectations for their growth prospects into the longer haul.
And Gina, we're going to get into the internals in just a moment in terms of the market groups within these indexes. With the S&P flat, as Romaine mentioned, I'm looking at the breakdown. We still had 378 names in the S&P 500. Taylor higher, 124 lower, 2 unchanged. So still more of a risk on if you look internally into it.
Yeah, Carol, you really see that on a sector level. For our radio audience, we take a look at the sector best performers, the sector worst performers. There's some green even in the worst performers, right? If you can think about breadth, Carol. Here, let's just start with some of the big winners on the day. Real estate, that feels a little bit defensive. So does food and staples, food and beverage, utility, and household products. That kind of gives you the sense of, up 2% on the day, sort of the defensiveness of this nature. You guessed it. It's technology at the bottom, right? So I'll keep it brief, but off 4 and 4.8%. It's auto components, and it is media and entertainment. I think I have an idea who that one might be, Carol.
Good guess, right? No doubt about it. You mentioned some of those consumer product companies. One of the gainers, we've got to mention, we've been talking about it, Procter Gamble, ending the day up about 2.7%, just off its highs. Third quarter sales beat analyst expectations. They did talk about higher sales driven by higher prices, and analysts definitely are weighing in and positive on the results. IBM also, we talked about their earnings after the close yesterday. That was a beat driven a lot by the hybrid cloud movement. So increasingly, IBM, we're seeing sustainable momentum as they continue to move into the cloud, up 7% on the day. And now for something completely different, Naked Wines. It's a small cap company. It's an online wine retailer based in the UK, rallying after it predicted it would report a surprise full year profit despite a fading pandemic boost. So I guess we're all drinking wine.
Yeah.
Stock was up 16%.
You can always count on Carol to keep an eye here on the wine market.
What are you saying? What are you saying? Hey, up 16%, and it held on to that gain. It's still down about 40% though.
Well, you guys are just bitter that we didn't invite you to Wine Day a couple weeks ago here at Bloomberg Radio.
Exactly.
But we'll do that. Invitation is open. Hey, let's talk about decliners. We've been talking about it all day. Down 35%. Netflix finishing the day having its worst day in nearly 18 years. You have to go all the way back to 2004 to find a day when Netflix had a bigger single-day drop. Shed more than $50 billion in market cap today, all because it lost subs for the first time in a decade. And of course, that outlook that says it's going to lose 2 million.
The volume was just insane. 132 million shares swapping hands. On average, pop quiz, Tim. On average, what's the daily average for Netflix volume?
Do you have the SINS function?
I have no idea.
About like 5 million shares a day.
Isn't it like 1,400?
And I was
here on the day here. So we're talking
Did you know,
25 times.
No,
Taylor
I was
didn't
just
know. She just pretends like she knows.
It's 1,476% of the month average. It's huge.
Yeah, insane day.
Those Netflix
and now
highs,
the worst performer in the S&P 500 year to date, as well as the Nasdaq 100.
Didn't we figure out that in the past year it's lost 168 billion in market cap?
Well, November was highs, and it's down more than 60% since then. Yeah. Let's talk about Roku too, because it also having an effect on other companies that are streaming adjacent, like Roku, down more than 6%. We're also keeping an eye on Tesla, down 5% today. We are expecting earnings to come after the bell. About 14%, down about 14% from highs earlier this month, down nearly 20% from those November highs.
And of course, Tim, as we wait for some of the big earnings to continue to cross the wire, we're taking a look at yields, and just a really interesting story, Carol, as we talked about the massive move in yields higher yesterday. Overnight, this is a correction. Romaine emailed me first. He was that excited about a positive real yield on the 10-year yield for the first time since 2020. Finally here, though, then yields on the nominal basis rolling back over today. It is a yield lower, bond price higher type of day, Romaine.
And of course, we're keeping an eye, of course, on earnings. All the drama yesterday surrounded Reed Hastings and Netflix. All the drama tonight probably going to center around Elon Musk and Tesla, Elon Musk and Twitter, or wherever else he's doing right now here on this day here. And we are getting those Tesla earnings crossing the wire right now. Here's your headline number coming here. 1Q numbers, their basic EPS coming in at $3.20. Now, that's versus a 46 cents from year over year on an adjusted basis here. Here we go. Adjusted EPS, $3.22. The street was looking for $2.27. Revenue for the first quarter, $18.8 billion. The street was looking for, on average, $17.92. Your gross margin up at 29.1%. 25.1 off of an estimate of about 25.8. Of course, we need to keep an eye here on what the forecasts are, what some of the production things, and of course, any commentary, guys, that we get out of Elon Musk. But overall, at least the top line numbers appear to be a beat pretty much across the board.
Yeah, absolutely. Tesla also saying it plans to grow their manufacturing capacity as soon as possible. We know that they've been opening up over in Germany. They've also been opening up in Texas. So they're increasingly, opening up their manufacturing capability. But again, on this call, we talked to Dana Hull of Bloomberg. She follows Tesla. What's so key is what they have to say about China and Shanghai specifically, a very important market, guys, for them.
Yeah, I mean, we talk about free cash flow, Taylor. I know that's something you pay very close attention to. $2.23 billion in free cash flow for the first quarter. The estimate was for $672 basically million. So that's a beat. And I assume 2.23, I guess that's something you would be impressed by.
They're continuing to talk about some of the record numbers that they see in the first quarter. I'm on the summary page 2 here of the press release, talking about the first quarter, of course, another record quarter when you look at revenues, vehicle deliveries, operating profit, and operating margins now of over 19%. So really some big numbers here as we digest perhaps maybe the intermittent stock reaction as well, Romain.
Yeah, the shares up about 2% here in the post market. That's a knee-jerk reaction. Bloomberg's Ed Ludlow out in San Francisco joining us right now. And Ed, a couple other headlines crossing here. Of course, has to do with that manufacturing capacity. The company says it's going to grow that ASAP. Also says it's making progress on the industrialization of the Cybertruck. I think, Ed, a lot of people really want to know kind of what's next for Tesla. We have the models that are out there on the road, but they've been promising new models and we haven't gotten them just yet.
Yeah, you guys hit the key points pretty well. I mean, the main takeaway for me is them confirming this target of 50% annualized growth rate, right? We thought that the disruption in Shanghai could put the full year production numbers at risk. You remember they delivered around 900,000 vehicles in 2021. They always talk about a 50% annual growth rate, but Shanghai is the real driver, the real engine of global production. And they're pretty sanguine about it in this earnings deck. They're monitoring the situation, they say. I would say, not just chip disruption, which has been an issue for Tesla, and the disruption to production operations. They are talking quite a lot about rising raw materials costs. But I look at their gross margin and the beat on margins, they've warned in price. Yeah, I think that with Berlin in particular, but also Austin, they're taking the template of Shanghai, right? They built that fat cyber rodeo event in the last couple of weeks where Elon Musk talks about how important Austin was to manufacturing at a, quote, massive scale. And they've already started deliveries of vehicles from that plant. So they're firing on all cylinders. The localized issues in Shanghai are interesting, though. The language somewhat vague. You'd expect analysts to ask for a little more than the 2 lines that we got on monitoring the situation closely.
Ed, where were the analysts so wrong? Why were they so negative on everything? Because we've got a beat on cash flow, we've got a beat on CapEx, we've got a beat on margins, we've got a beat on the top and bottom line. I mean, you can't beat anything else. Why were analysts so negative?
Yeah, I think there was some severity priced in or factored in what's going on in Shanghai. I hate to pick on him, but Dan Levy at Credit Suisse, for example, thought that the shutdown in Shanghai would probably impact production to the tune of 90,000 units, which would put the full year picture in jeopardy. Again, Tesla doesn't say this year we will build this many vehicles. All they do is either reiterate or not reiterate that full year 50% annual growth rate. Shares are up modestly, well, okay, almost 4% now, but shares are up. You'd think that the market latched on that confirmation of the growth target and thinks things are going pretty well.
So China, we know, obviously so important, and they do say on that release, Ed, although limited production has recently restarted, we continue to monitor the situation closely. What is it that we've got to dig into, drill into on that earnings call when it comes to China specifically?
Yeah, I think what Tesla talks a lot about is the localization of the supply chain in China. A lot of the raw materials are coming from pretty nearby. A lot of the semiconductor supply is coming from a lot of nearby. But we care about the mix of products globally, right? So the vehicles that are being built out of Shanghai, because they're at greater volumes and they have the localized supply chain, those are higher margin vehicles. It's why we care so much about volumes. So if they're doing so well and they beat so comfortably, essentially, on top and bottom line, you would expect them to talk pretty bullishly about their growth rates in China, how well they're doing in the domestic market, but also shipping vehicles from that plant to other markets around the world.
All right, Ed Ludlow out in San Francisco as we digest, of course, the earnings out of Tesla coming in right now. And Taylor, they're still talking about supply chain issues going to persist through 2022. But overall, the numbers, at least on the surface, appear to look pretty good.
You talk about supply chains on the vehicle, the Shanghai plant that we've talked a lot about, maybe Berlin a little bit too, but also mentioning batteries on page 8 and energy storage on at page 9. Talking about massive demand and nowhere near capacity for that, and really the usage of batteries integrating further that supply chain to confront some of those supply chain challenges. Let's do all of this with Sean O'Kane. He covers EVs and automotive startups here for Bloomberg. Overall, is this a decent print that you think maybe the street is having a sigh of relief here?
Yeah, I mean, one thing that I've always found interesting about Tesla's operations in China is, as short-lived as they may be so far, is that even when they suffer some setbacks or apparent setbacks from the outside, including shutdowns related to COVID, they're always able to sort of find a way to hike up that production by the end of the quarter. And so I think we're seeing probably a little bit of a sigh of relief that they weren't hit as hard as people might have thought they were by the shutdowns recently.
When we talk, though, about some of the supply chain issues, there's been a lot of reporting, of course, about how Tesla was able to kind of navigate at least the early part of the pandemic with regards to the shortage in chips, the idea that some parts and other components that they stockpiled here. Do you have any sense here of sort of what the ramp is now going forward with regards to their supply, whether they have it now or they have enough contracts in place to get what they need?
That's a really good question. I actually hope we hear that on the call tonight. They've done some really creative work, at least as far as they've shared on previous calls, on working around some of the chips that they use and reprogramming, rewriting software to fit different chips that they were able to get. So they were able to, at the capacity that they're working at and have been working at the past couple quarters, and along that growth curve, they've been able to manage. But they're still talking about incredible ramp-ups at the new factories in Austin and Germany. And so that's going to be a big question going forward.
We know, Sean, that the company has experienced inflationary pressures, rising costs of commodities throughout the supply chain. The company, though, did say that automotive gross margin for the first quarter was 32.9%, beating estimates of 28.4%, and gross margin in 29% versus 25.8% overall. What does that tell you about pricing power that Tesla has to pass on those costs to consumers? They're willing to pay more.
Yeah, I mean, one thing that we've learned over the last 2 years, but especially the last year, is that if people get spooked by some of those price increases, which Tesla's been doing for a long time now, ever since they introduced the Model 3, and it was a little bit north of that originally promised $35,000 price tag, every time they move that number up, even if people get scared away, there are more people waiting in line behind them to buy it. And so, and to add on top of that, to pay some money for some of the more advanced partial autonomy features, and a smaller percentage of those people willing to pay for the promise of full self-driving. But yeah, we're just seeing the story with Tesla really has always been trying to ramp up production so they could meet the sort of demand that outstrips that production rate.
Really appreciate your insight. Quick analysis. Sean O'Kane, who's been covering EVs and automotive startups for Bloomberg. Romain, you have to love a company to give them credit. They give us a good overview. Right. And then we get like 5 pages of photos before we even get to the balance sheet. So that's incredible.
Yeah, pretty incredible here. I mean, and look, I mean, this is a company that most people, I should say most people, but a lot of people, of course, doubted that they would get to this stage. They have reached mass production of EVs. And I guess the big question is, what comes next here? You continue to see the prices rise on some of these models. Remember, this was a company a few years ago was talking about they were going to be able to bring those prices down, and you wonder if we ever get back to that.
And you also have to wonder what comes next longer term as more electronic vehicles come to market. What does the competitive landscape look like? Yeah. How does that change overall? And how does the competition change for the supply of inputs that go into those cars?
Well, and it's interesting, too. I mean, Elon, of course, has been on Twitter kind of making fun of some of the other car companies. For all the new models that we've been talking about here, how many of them are actually on dealer lots or on the road right now?
That's the point. You look at that free cash flow number. I mean, that is a blowout number. I know you guys were talking about it. First quarter free cash flow, $2.23 billion. Estimate was $671. What kind of leverage and opportunities does that provide Tesla going forward as it tries to expand it and keep, competitive against all these new companies that are coming into the market?
And doesn't it go back to the supply chain issues too? I mean, if GM and Ford and all these other companies aren't able to get the chips and other things they need to get those cars on the road, then it doesn't matter. Rivian, Lucid.
Right. It gives them a little more runway, right? It gives them a little more runway anyway for the next year.
You're going to have to keep driving your F-250, Carol, for a little bit longer.
F-350.
I always love when I can park it next to yours, Romain. Always love it. What is it, the Frunk?
Yeah, that's the F-150 Lightning.
Gotta love the
trunk
front.
in the front.
All right, guys, we got to run. This is going to continue to be a story into tomorrow's market. We're seeing Tesla shares definitely rally in the after hours. As Gina mentioned, it is just an outperformance on so many different metrics here for those Tesla earnings. All right, that's going to do it for Beyond the Bell. Cross-platform coverage, radio, TV, and YouTube. We'll see you again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Messer and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
It's Bloomberg Business Week. Let's get right to Charlie Pellet with an update on the markets. Hey, Charlie.
Well, hello there. Recap, resetting on Tesla. Big story, as Carol said. We'll be talking about this tomorrow. And, of course, we'll see how Asian markets interpret all of this tonight. Continuing coverage, continuing reaction. But an earnings beat out of Tesla. First quarter revenue, $18.8 billion. Estimates, $17.92 billion. First quarter adjusted EPS, $3.22. Estimates there, $2.27. Tesla does say supply chain issues will continue through the rest of 2022. After hours, though, Tesla shares, they are advancing up today by 4.5%. The Dow higher, S&P, NASDAQ lower today. Stocks declined, earnings very much in focus. Take, for example, Netflix. Netflix plunged 35.1%, leading NASDAQ to a loss of 166 points today. NASDAQ was down 1.2%. S&P down 2, a drop there of 0.1%. Again, the Dow up 249, up 0.7. 10-year yield 2.84%. Spot gold at right now, $19.55 the ounce, up 0.3%. West Texas Intermediate crude up 0.2%, $102.75 a barrel. So again, recapping an earnings beat out of Tesla after the closing bell today. After hours right now, Tesla shares are advancing by 4.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much for that update. We mentioned it's 420, Kriti Gupta's birthday, my husband's birthday. It's also Marijuana Day, World Weed Day, Cannabis Day, unofficially, of course.
Wait. That's a lot of things to happen in one day.
Well, I kind of, you call it a couple different things. Hey, the global legal marijuana market size, though, Tim, I've seen estimates of $84 billion by 2028. And yet investors don't seem so impressed.
Yeah, cannabis stocks have been getting beat up so far this year. Jason Wilson is a cannabis banking and research expert at ETFMG. Jason joins us on Zoom from Los Angeles. Jason, good to have you with us. How are you?
Good, thanks. How you guys doing?
We're doing well. So despite the fact that legalization, well, we'll talk about the federal level later because there's a lot to discuss there, but on a state-by-state basis, we're continuing to see regulations around marijuana, both in a medicinal and recreational use, easing, but we're not seeing investors react optimistically to the public market, at least the opportunities they have to invest in, to get exposure to cannabis companies. Why are cannabis companies so unloved this year?
Yeah, a lot of it has to do with expectations. If we look at 420 in 2021 a year ago, there was a lot of expectation that we'd see, with Democratic control of the Senate, that we'd actually see meaningful cannabis reform come forward, and that was coming on the back of tremendous sales growth, kind of 50, 60, 70% kind of year-over-year sales growth with a lot of the MSOs. As you mentioned, an increasingly growing addressable market with more states coming on board. And in addition to that, globally, with more countries moving to, adopting medical marijuana programs and some speaking of, talking about adding recreational programs. But as the kind of, the last years played out, we a few things have happened. Obviously, legislation's been stuck in the mud. There's really been very little progress. I mean, there's been a number of bills that have made it through the House, and it's not really an issue of partisanship. There's support from both sides of the aisles to get it done, but at the end of the day, Schumer has his own bill in the Senate that is pretty far-reaching and unlikely to garner the support that's necessary to get it passed. So we've seen this stalling on the Hill. And sales growth has been good. I mean, we went from last year, we had almost 25 billion in sales in the U.S., almost 30 billion globally.
Right.
Well, strong year-over-year growth, but it started to taper a bit. So margin compression as well. So a few little things.
Okay.
happening, but for the most part, expectations of investors, they haven't seen the movement on the hill.
Well, I want to give some context here to these numbers. The POTX ETF, it's the Global X Cannabis ETF that tracks the performance of the cannabis index. It's down 70% from its highs just a year ago. So there's some context, Carol, to how much they've been unloved.
Well, in your own ETF, right? I don't need to tell you the numbers. I mean, and it's interesting. I think, investors, like, what is, in your view, Jason, the realistic time frame for investment in this space? Because I know we have been talking about it for years and got really excited, had a lot of companies come in and talk about their move into the consumer product space. A lot of those companies are no more. So how do we need to realistically be smart about this space?
Yeah, there's definitely a reset of expectations, and the expectation isn't 1 year to legalization anymore. And in markets where legalization doesn't matter, for example, Canada globally, we're learning that it just takes a while coming out of prohibition to build out dispensaries, to develop brands, to convert curious consumers, to beat out the illicit market, to get the regulatory regime right, specifically with respect to taxes, to allow legal companies to be more competitive. So the expectations now are we're really looking at a 5 to 10 year window. It's a longer growth opportunity, and the tailwind, the catalyst behind that is legalization. So legalization will just kind of backfill that and potentially shorten the span. But at the end of the day, the real opportunity here is being able to get into these emerging CPG companies that will likely have better margins, a big expanding market, not just domestically, but globally.
Jason, forgive me though, because I could rewind the clock and think 3 years ago, 4 years ago, we could be having the same conversation of people saying, okay, now's the time to get in early. And yet it was too early. It really was too early. So when you say a 5 to 10 year window, is it maybe smarter for investors? I mean, if this is going to be a growing, no pun intended, growing market size, right? Once legalization and federal oversight and it's all kind of in place, could investors, wouldn't it make sense to kind of hold back for a little while?
Yeah, the one challenge with holding back is once we see a reform, then we're going to have a flood of institutional investors come into the market. And that's the one thing that's really driving down, particularly on the U.S. MSOs, is when you look at these operators, they're trading at very good valuations for emerging, growth companies. And a lot of that has to do with the fact that there's no institutional support there whatsoever. These stocks trade on tertiary exchanges, a Canadian Securities Exchange. And that's a big holdback. So, the opportunity is there is a bit of wait and see, without doubt. But, we're seeing these valuations have halved or more since last year. Earnings are strong, revenues are growing, the market's growing. And the real catalyst here is going to be when do the institutional investors come in? So it's time in the market is usually better than timing the market, in my opinion. And dripping in when valuations are good seems like a reasonable strategy.
Hey, Jason, I'm wondering about the effect that not without having clear legislation or without having clear guidance from the U.S. government, the federal government, what effect does that have on the U.S. cannabis industry?
It's significant. It's the lack of clarity to know exactly what model will be in place is frustrating to operators. So there's that aspect of it. The biggest challenge right now, really, for them is the fact that without a federally legal regime, 280E prevents most operators from deducting most of their operating expenses. So it creates a very high effective tax rate for them. And you add to that the fact that it creates a very, without having access to traditional capital markets or commercial banking, a very high cost of capital. So it's a big drag on them operationally, let alone when you look at some of the safety issues with these companies operating significantly in cash.
Hey, Jason, look forward to catching up with you again in the future and continuing our conversation. That has been Jason Wilson, cannabis banking and research expert at ETF MG, joining us via Zoom from Los Angeles.
420.
420. It's been a theme today.
Yeah, it has.
All right, coming up, we're going to talk a little bit about the environment. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Carol Massler along with Tim Stanovic. And coming up, we're going to talk a little bit about the environment with really a great pair.
Yeah, we're looking forward to be joined by Philippe Cousteau, the co-founder of Earth Echo International. Also joining us will be Doug Heskey, the CEO of New Day Impact. We're going to talk all things environment and ESG.
Yeah, exactly, and really educating a younger generation and so much. First up, though, back to your top business stories, including those Tesla earnings. Over to Charlie.
Indeed, and just breaking right now, Carol, on the Bloomberg Professional Service, United Airlines first quarter adjusted loss, $4.24 a share. Estimated loss was for $4.23. UAL shares, they are flying lower after hours, down now by roughly 1%. Tesla, though, the big story after hours, reported better than expected first quarter results, boosted by strong demand for its EVs amid ongoing supply chain challenges and that COVID-19 lockdown in Shanghai, crimping its production in China. Sean O'Kane covers electric vehicle makers for Bloomberg News. He's based in Austin. He was interviewed right here on Bloomberg Business Week.
One thing that I always found interesting about Tesla's operations in China is, as short-lived as they may be so far, is that even when they suffer some setbacks or apparent setbacks from the outside, including shutdowns related to COVID, they're always able to sort of find a way to hike up that production by the end of the quarter. And so I think we're seeing probably a little bit of a sigh of relief that they weren't hit as hard as people might have thought they were by the shutdowns recently.
Tesla did say supply chain issues will continue through the rest of this year. Also after the bell, Alcoa, it reported earnings that showed its sales of aluminum were weaker than expected. After hours, Alcoa down by 4.8%. Turned out to be a mixed Wednesday. The Dow higher by 249, up 0.7%. S&P down 2, little change, down less than 0.1%. Netflix weighed on NASDAQ. Netflix plunged 35.1%. Today, NASDAQ was down 1.2%. 10-year yield 2.83%. Spot gold up 0.3%, $19.55 the ounce. West Texas Intermediate crude up 0.2%, $102.75 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Remember we got dystopian with Alex Webb a little earlier?
Yeah, I did. I got really dystopian with the cell phone part because I just, feel like I'm as addicted to using my phone as I would be addicted to anything in life.
Well, we all are. And here's another dystopian story, or I felt like it was dystopian. Bloomberg Green chief Eric Roston, he said that he has a story out, noted that after a historic fall in carbon emissions because of the pandemic and shutdown of the economy, carbon emissions now are coming back fast. In December, global emissions were higher than during the same month in 2019. This is some new data from the International Energy Agency. Upsetting as we think about Earth Day later on this week. Just upsetting in general.
It is, and also thinking about the next generation.
Totally.
Of citizens of the world who are going to inherit what we've left them. We have a couple great voices to join us on this. Philippe Cousteau is the co-founder of Earth Echo International. He joins us on the phone from L.A. Also joining us is Doug Heskey, the CEO of New Day Impact, joining us on the phone from San Francisco. Philippe, I want to start with you. I got criticized earlier by my colleague sitting next to me, Carol, for being a glasses half empty type of person, a pessimist. But when we hear things like what Carol just read, it's hard not to be pessimistic. Is there any reason for us to have optimism when it comes to thinking about our impact on the globe?
Well, it's a great question. Listen, and first of all, thanks for having me again on the show. Always thrilled to join you both. There's a lot of reason to be pessimistic. Right? We all see it every day on the news. It's no surprise. And the reality is that we face very serious problems. And we've actually already, lost a lot. I'll just put it that way. In my lifetime, in 40 years, we've lost half the world's biodiversity. There's one example. Think about that. Half the world's biodiversity gone. So yes, there's a lot of reasons to be pessimistic. However, there are a lot of reasons to be optimistic as well. And I think that what we're finding is, I know that what we're finding from a business perspective, which we'll talk about, in just a moment, is the growth of ESG investing, is a recognition that where we put our dollars matters. But more broadly speaking, we're also finding that, my work over the last 16 years has been focused on education through my nonprofit Earth Echo International. And what we're finding is that globally, there is a generation of young people who are aware of what's happening, who are determined to change it, who are optimistic about the future, and who are taking extraordinary steps to build a global movement, to build a better future. And so while we are seeing emissions grow up, increase, while we're seeing, plastic usage increase, we are also seeing a generational shift in the right direction. And that generational shift is what will create the kind of political and economic change that we need to build a truly hopeful and restorative future.
Well, and I have to say, I do feel a little hopeful in that it was amazing how quickly, when we, of course, shut down the economy, how quickly skies were blue and air was clear, and it was amazing. I also think about plastic bags here, how we've given them up, right? They're gone, and it was like, I feel like we flipped a switch, and I have my own little bag. I use my own little bag when I go shopping.
Scout?
For
I
Scout?
see plastic bags.
Oh, yeah,
there is
the dog thing. Philippe.
Well, listen, some of that we can't get away from, right?
Doug, come on in on this conversation, because Tim is actually a glass half full kind of guy, usually. I certainly am an optimist. How do you feel about what we're doing here, especially when we're looking at kind of the energy crisis, that it feels like Europe is underway, and we're talking about kind of re-drilling again, or adding to drilling maybe in the U.S. and so on and so forth, pumping up kind of our traditional fossil fuels to kind of help out our European allies?
Yeah, certainly a lot of challenges that we are all trying to address. But one of the things that we really love talking about is this idea of utopia for the future. And it's a really fun time to be doing so, given that there is a growing universe of very impactful companies that are doing incredibly powerful work as they try to wed profit with purpose. But it has become increasingly difficult to stay focused on the positive, as both of you were just previously characterizing. And it's been bothering me personally for years, and us at New Day, is that we don't like this narrative that we're living in. There are an unlimited number of frighteningly existential threats, things that are coming at us. I know they're coming. We all know they're coming. Species extinction, rising sea levels, exploding population. Some of the things that Philippe was previously characterizing. But the great news, and I would only reinforce this based upon what you both have said previously, is that there is this incredibly powerful generation of younger people that are determined to make change and are making change today, which is really exciting.
Yeah, it's interesting when we talk to heads of companies that they say so much of what's driving their sustainability initiatives, not only that it's the right thing to do, but their employees are demanding it, especially a younger employee base. And if you don't do it, they're going to go work somewhere else. Hey, we're going to come back to Philippe Cousteau, co-founder of Earth Echo International, a nonprofit. They work with young people toward a sustainable future. And also coming back with us is Doug Heskey. He's CEO of the impact investor New Day Impact. We'll continue this conversation. It's a timely one, and I really want to get into ESG assets too, because we really thought investor money would help us kind of get there faster. We're finding ESG has some problems.
This is something that you and I are going to be talking about at Milken in just a few weeks.
Big time. That's really kind of top of mind for everyone. All right, right now, top of mind, so much going on in the world. And let's get over to Nancy Lyons in D.C. with a check on that. Hey, Nance.
Hey, Carol. Ukraine is working with Russia to reach another agreement on a humanitarian corridor to allow women, children, and the elderly to evacuate the besieged city of Mariupol. Bloomberg's Irv Chapman has the latest from Washington.
Secretary of State Antony Blinken said Russian atrocities against civilians in Bucha could be far worse in Mariupol.
We want to see people who are in harm's way leave safely and securely. This is a very, very difficult decision to make, to evaluate whether Russia will actually live up to whatever obligations it's undertaken. This is for the government of Ukraine to decide. We'll do anything we can to inform that decision.
Blinken recalled that previous humanitarian efforts in Mariupol broke down when Russian troops fired on evacuees. He spoke at a news conference concluding a visit to Panama. In Washington, Irv Chapman, Bloomberg Radio.
Actor Johnny Depp has been back on the stand today in the $50 million libel lawsuit he filed against his ex-wife, Amber Heard. She wrote of domestic abuse in a Washington Post op-ed, but did not mention Depp by name. Today, he testified their marriage was fraught with conflict and that Heard would sometimes even throw objects at him during arguments.
I would just go and lock myself in,
the bathroom or anywhere that she couldn't get into. And that happened constantly.
Depp denies any physical abuse against Heard. She is countersuing him for $100 million. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nancy, thank you so much. Carol Masser along with Tim Stanovic. And just watching some of the earnings, Tesla, obviously the big one. We've heard Charlie continue to break that down, and we've seen Tesla higher in the after hours, really just kind of on all metrics, just beating. Stock is still up about 4% in the after hours, but American Airlines also up.
United Airlines.
Oh, United.
Yeah,
United.
The company expecting to be profitable this year, overcoming a first quarter loss. This as consumers increasingly ditch their pandemic era habits and resume air travel. Carol, you and I have been talking a lot about air travel because I think we've got, 3-4 flights, sets of flights planned coming up just in the next couple of months. It has been really, really difficult to find flights. We've noticed that flights that used to be offered just a few months ago are no longer there. So we're seeing the scaling back of flights, but expect demand to be high, at least according to these airlines.
And prices are expensive.
Yeah.
Like we're kind of blown away by how expensive it is.
Very expensive.
United Airlines shares, they're up about 5.7%, 5.6%. I mean, this is something that over the last decade or so, airlines get very smart in getting rid of excess capacity. I remember how many times even flying from east to west coast and the plane would be empty. You'd have whole rows to yourself. And I feel like easily in the last decade, if not more, that airlines have gotten very smart about capacity and making sure their flights are full.
What do you mean by smart?
Well,
I know what you mean. It's
right?
just I think about it from the consumer's perspective, right?
No, we're all in there like sardines. But I mean, they've gotten very smart in, making sure that, taking out that excess capacity so that when a flight goes out, it's full and they can make the most money on it.
Well, check this out. The CEO of United Airlines is Scott Kirby. He's saying in a statement that, quote, the demand environment is the strongest it's been in my 30 years in the industry. Wow, that's saying something. Demand is so high right now that he has never seen it in his time in the industry higher.
Well, and then you think about the backdrop of Netflix yesterday and whether there's a lot of different things going on, increased competition for this company. But I know for me, we're all tired of watching things. We're looking to get out and experiencing things, and that makes sense in particular when you look at the travel industry. So we'll watch United, as we mentioned, definitely on the move.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World headquarters, I'm Charlie Pellet. Earnings fast and furious. Tesla reported better than expected first quarter results, boosted by strong demand for its EVs amid ongoing supply chain challenges and a COVID-19 lockdown in Shanghai, crimping its production in China. After hours, Tesla up now by 4.1%. United Airlines expects to be profitable this year, overcoming a first quarter loss as consumers increasingly ditch their pandemic-era habits and resume air travel. After hours, United up now by about 6%. Alcoa out with earnings that showed its sales of aluminum were weaker than expected. Alcoa, after hours, down by about 3.9%. Most stocks higher today, earnings in focus, but the S&P did decline 2 points, little change, down by less than 0.1%. The Dow rallied 249, up 0.7. NASDAQ, though, was weighed down by Netflix. NASDAQ down 166 points, down 1.2%. Netflix plunged today by 35.1%. The 10-year yield, 2.83%. Spot gold up 0.4%, 19.57 the ounce. West Texas Intermediate crude up 0.2%, 102.75 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Charlie, thank you so much. Appreciate that update. A lot going on this Wednesday. I want to get back, though, to our guests. We're talking with Philippe Cousteau, co-founder of the nonprofit Earth Echo International. As I mentioned before, they work with young people. It's all about getting towards a mission of a sustainable future. He's still with us on the phone in Los Angeles. And Doug Heskey is CEO of the impact investor New Day Impact on the phone from San Francisco. Doug, I want to start with you, if I can, in the second block, because I do think about all of the money, our Bloomberg intelligence team reporting that ESG may surpass $41 trillion in assets this year, $50 trillion by 2025, 1/3 of the projected total assets under management globally. Investors want it. Consumers and customers increasingly want to associate with sustainably focused companies. Global governments are demanding it. And yet ESG investing, many would argue the fund industry is kind of adding fuel to the fire because you still see money on a sustainable basis going into some of the fossil fuel companies and so on and so forth. How do we kind of get investor money going in the right direction, or at least a sustainable direction, as many say we need to be going if we want to make sure we really save Earth?
Yeah, that's a great question. And certainly today there are a lot of criticisms associated with the environmental, social, and governance investing space. And not all ESG investing is good ESG investing. And I think that oftentimes there's a misunderstanding of the impact that can be achieved through ESG investing. ESG is nothing more than a framework from which people can make, I think, improved financial decisions relative to their investment portfolio. But it is not a replacement for impact unless people are using it as a tool for change, using their shareholder and stakeholder voices to advocate for that change. And there are a lot of passive portfolios that invest in some of the companies that you previously identified, but also use that as an active mechanism to drive change in the boardroom. You know, we think about the work of Engine Number One and other companies like that that have tried to take on organizations and have done so somewhat successfully in changing practices at those organizations. So we as an organization think about this very differently. And there's a lot of nonsense that goes on in the ESG space. This is all about using capital as a tool for change and driving that change through not necessarily activism, but certainly advocacy.
Well, Doug, just to follow up on that very briefly, do we need a new metric in order to judge companies on this? We're in the midst of earnings season right now. We just heard from Tesla. We just heard from United Airlines. And the stock's not moving based on ESG. The stock's moving based on outlook. It's based on profit. It's based on what the company says about profitability for the year, how many cars, in the case of Tesla, are going to be delivered, and operating margin. Do we need something that measures ESG that moves a company's stock?
I think that we need a new construct. And I think that over the course of the last several years, maybe even in fact the last decade, there's been a lot of criticism for capitalism. But it's not capitalism that's broken, but the way that we use it. And so the form of capitalism that we need today is one that does recognize that financial rewards should be paid to more than just shareholders, but to all stakeholders, whether they be the customers, the employees, the suppliers, community members, and people like that. So historically, organizations are measured oftentimes based upon return on equity, but we need a more advanced model to really recognize the net impacts of both socially and environmentally what we're doing in the communities that we're living and operating in.
Philippe, come on back in on the conversation, because I do think about a younger generation. Tim has a little one, but my daughter is 19, and she definitely talks a lot about the environment, is looking where products are manufactured, the impact on the environment. It's not pure and it's not easy to always do things in a good and ethical way, but I do feel like there's a raised awareness among a younger generation, and whether it's war, apartheid, racism, younger generation can definitely change things. So what are you doing? Talk to us about the efforts and the impact that you guys are all having.
Well, you're absolutely right, Carol. The point is, no social movement has ever really been successful unless it's focused on the younger generation. And frankly, the environmental movement, in my opinion, has failed in some respects because it has neglected the very basics of understanding how to build a movement and focus too often on passing laws or short-term kind of wins, as opposed to recognizing the importance of building a foundation in society for people to care about these issues and to drive, as Doug was talking about, the kinds of fundamental changes, economic changes and values-based changes to how we live our lives, what we expect from the companies and the politicians that we interact with. And that's the good news. You know, as you alluded to, young people today are at a completely different level than previous generations, certainly than when I was in high school. We had maybe, I don't know, the recycling club. And
remember the paper drives, the newspaper drives.
And adopting forests in Brazil. I think we did that when I was a kid.
You know, and we're seeing now young people that are raising money, starting their own organizations, helping to pass, laws. We worked with 13-year-olds that have drafted and gotten, legislation passed in their municipalities to require solar panels built on all new buildings. We've seen young people and I'm talking young people in Africa and South America, United States, the UK, Australia. We work with young people all over the world. And so it's this growing movement because they're connecting the dots and recognizing that, hey, if I want to have a planet, if I want to have a world that I can have healthy, clean water and clean air, and that isn't ravaged by climate refugeeism and conflict, et cetera, that we're already seeing, then we need to make some pretty radical changes. And that's the beginning of how you achieve the kind of social change and the values change that Doug was talking about. And it's very, very heartening. And frankly, really the only thing that gives me hope.
Philippe, we only have about a minute left, and I want to just back out here and think about the ocean really on a global scale here. You and your family have a big legacy when it comes to oceanic exploration and preservation, and I'm wondering, Philippe, why the ocean is the right place for us to look when it comes to conservation.
So 2 reasons. One, the ocean is at the center of the challenge when we talk about climate change. Climate change is an ocean problem, and it's still not where it needs to be in terms of global recognition that the oceans are the issue that we need to be talking about. First and foremost. Second of all, the ocean has an enormous capability for renewal and restoration if we give it a chance. And that's the good news. Again, humanity can work with nature to help restore the oceans to abundance and to help them be our greatest ally in combating climate change and building a better world. And so those 2 things together, ocean focus and ocean restoration, are key.
All right. So appreciate it, guys. Good luck with all of your efforts. Philippe Cousteau, co-founder of Earth Echo International. Check out the organization. He's joining us on the phone from Los Angeles. And also check out what Doug is up to. Doug Heskey, Chief Executive Officer at New Day Impact Investors, really looking to make things differently and make it stick longer term.
Speaking of that, I'm looking at shares of Tesla in the after hours, higher right now, after reporting earnings, up in the after hours.
All right, everybody, have a good and safe evening. This is Bloomberg.